Oh, we're live. Oh my gosh.
Are we live?
We're live. Man, busy morning here at Benzinga HQ. Busy morning in the market. AB, what's up? How's your weekend?
It was good. Can't complain. Pretty low-key weekend.
Pretty low key? Okay.
Yeah.
Cool. That's cool. I had a cool weekend.
How was your weekend?
Got a haircut. Went to see Stomp. That's pretty much it.
Tried to see Stomp.
Yeah.
What's that?
You know, the show where they do the banging and the stomping and the banging and the brooms and
Was it good?
yeah, it was all right.
All right.
Yeah, it was all right. It was cool. Tried to go for a hike yesterday, but it was just too muddy. It was so nice out. It's dark outside now, but you can't tell. The weather was beautiful yesterday here in Detroit, but market's not so beautiful here today. We're going to talk about that. We're going to talk about Bed Bath. Obviously, Aaron, I can tell you about my trade that I made this morning.
On Bed Bath?
That did not work.
Woo!
And that we're gonna have Matt Hammond, we're gonna have Jake Wojastik, Chris Capri, and I think I'm missing a guest. I know I'm missing a guest. Who's our last guest? I know I'm missing someone.
Our last guest, who'd you say?
I said Matt. Oh, I'm missing our first guest of the day. I knew I was missing someone. We're talking to Craig Erlam. Craig is great, man. Craig Erlam is a senior market analyst for OANDA, and we're going to talk about Forex. The Forex markets are doing some weird shit.
Yeah, I mean,
So,
yeah, you have the ruble just continuing to crash.
yeah.
So it'll be interesting to talk to Craig about that. What else is everyone watching today? So I was watching. Or actually, let's go ahead and roll that intro, Spencer, and then and then we'll get going.
Let's do it. Who's rolling the intro? Me?
Oh, I mean, someone.
I'm doing.
Producer?
You're doing it. I'm doing it.
This is Benzinga Live. Spencer Israel and producer AB.
What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojastik from Trend Spider. We have a
Breaking news.
All right. What were you going to say about what you're watching?
I was watching Lockheed Martin because and I'll pull up the chart here. Watching the intraday chart. It looks like we're about to either kind of reject highs and move lower, or make new highs and set up for a breakout trade. So that's one stock that I'm watching right now. I mean, it's what's strong has been strong, right? Your Lockheed Martins, your Chevrons, your oil and gas companies, and so I'm on a 5-minute chart right now, Spencer, and you can see we may have this double top forming. Although, like I said, if we kind of continue to make new highs, then it's setting up for me the other way on a breakout trade. But if you pull this out on daily candles, I mean, you can just see how, in my opinion, kind of a little too much too fast for Lockheed Martin. And I understand, I mean, who's going to go out there and buy puts on Lockheed Martin in the middle of a war? I understand that. But I do think we're due for a little bit of a drawback here, even if the trend continues and we see Lockheed march up to $500.
Well, why Lockheed as opposed to any of the other ones? Out of curiosity, is that just the one you picked on?
No, I think Lockheed, and let me fact check this real quick. I mean, RTX, Raytheon is the other
RTX, NOC, and LHX. Those are your four.
So here's your answer, Spencer. So Raytheon RTX is up 10% over the last couple weeks.
Okay.
Lockheed Martin, by comparison, is up almost 30%. So Lockheed Martin has just gotten more extended than Raytheon has.
Okay.
What was the other one you mentioned?
LHX, L3 Harris.
L3 Harris is up about the same as Lockheed, a little bit less.
And then NOC is the last. Did you NOC? That's the last one.
NOC.
Northrop Grumman. Which, by the way, I know someone who works for.
Yeah, that's interesting. I mean, NOC is up about 25%, similar to Lockheed. It's interesting to
do
see
this.
Raytheon just kind of lagging the other defense stocks. I mean, Raytheon's only gotten this, from like mid-February to now, kind of a 15% gain. I mean, and that's actually from January if you pick its lows.
Let's just go to a daily here. Let's put them all together. And let's do it since they're all pretty correlated, but since February 24th, because that's when the invasion began, right, I believe. So look at this divergence. And I'm going to put the labels up on the right so you can see it. Wow, look at Raytheon. Look how much it's lagged.
That's what I'm saying.
Yeah.
That's what I just noticed.
So it doesn't is that bullish though? Does that mean it's due for a catch up trade?
I mean, what, you're gonna go buy Raytheon now, and then if we get good news on the war, you're just down? I mean, I don't know. I mean, I
don't know.
I think we'll see. Oh, also speaking of the war, I saw this today.
Yeah.
The Kremlin.
Yeah, I've heard of it.
Has announced its demands for ending the war in Ukraine.
Oh yeah. To give it to us. I'm ready.
Ukraine
Yep.
must change its constitution and guarantee it won't join any blocs, i.e. NATO
Okay.
or the European Union. That seems easy enough. I think NATO already said they weren't gonna let Ukraine join.
Oh, I don't know. I know.
know.
I know they're joining the EU.
Someone fact check that. All right. Well, NATO, EU, you just can't do that.
Okay.
All right. 2. Ukraine must recognize Crimea as part of Russia.
Which it basically already is anyway.
Right, and the people that live in Crimea voted to be part of Russia.
Okay.
And then must recognize the eastern separatist regions as independent. So if you're Ukraine,
What's in this for Ukraine? What's in this for
war
you?
ends. If I'm Zelensky, I'm signing this immediately. I mean, there's a couple regions on the eastern part of the country that are going to be independent. You don't join NATO or EU. And Crimea, which is already part of Russia, officially becomes part of Russia. It seems, yeah. I mean, Ukraine actually does have a lot of leverage in this situation with how much like backing from European countries, from the U.S. Ukraine has gotten. But at the end of the day, that backing only goes to a certain extent. You've heard Zelensky call for a no-fly zone, which we, the U.S., other European countries have already come out and said, we're not going to do that. We're not going to effectively start World War III and shoot down Russian planes for you. So if you're Zelensky and you understand that you do hold some leverage in the fact that you have support in the form of weapons and aid being sent to you, you have the support in the form of sanctions being imposed on Russia. But if I'm Zelensky, I got to question, what happens if Russia ramps up its war efforts and we don't have that protection from the U.S., from Europe, that we're not going to implement a no-fly zone. If I'm Zelensky, I'm strongly considering signing this agreement today.
Well, they're meeting again on Thursday. They met this morning. That's where those demands came out. They're going to meet again in Turkey on Thursday. So I guess we'll wait until that happens because I highly doubt anything's going to happen between now and then. Maybe I'm wrong.
So like,
I hope I'm wrong.
Best case scenario.
Yeah.
Who knows? Maybe Zelensky shoots back some counter, a counter offer where he's like, okay, we won't join NATO, but we'll still join EU. You can have Crimea, and we'll recognize this independent region or this separatist region as independent. Whatever. Best case scenario, that happens in between now and Thursday. Thursday, deal signed, finalized, conflict over. I'm not really bullish on that happening. Can hope.
Can I show you what happened when the news broke this morning that they were going to meet today?
Sure.
Okay. This is the SPY.
Okay.
So one minute
this
chart.
tracks the S&P
This is a 1 minute chart of the
Don't
SPY.
tell me that big red candle down was when they were going to meet.
No, this is not real. This is not a real print. This is
okay.
This is at 8:30. That's not real. No, the news broke here. Actually, I think it was like here. It was like right here. It was 6:45 a.m. Eastern time this morning. Right where my mouse is, right there. Wait, why am I seeing my mouse doing weird things on?
So wait,
That's
is
weird.
that big leg up from like 6 a.m.
Hold on, my mouse is doing some weird. Oh, it's because it's delayed. That's why. Duh. This big leg up. This is the response when that news broke that they're meeting this morning, that they're going to meet at 9 a.m. Eastern time. So we basically reversed on that headline. Every single stock that was down this morning, which was basically all of them, reversed. Technology, the banks, industrials, everything. Now, we've since reversed again. We're obviously down from the open, but for the from 6:45 to 9:30, it was basically straight up all morning because the two sides are going to go to the table and negotiate. And that's where we are. We're just in a market that just relies on the next headline, the next thing. Let's go to a 15-minute chart. You can just see it's been a story of three markets already. We set to open way lower, rip higher, now straight down. Testing low of the day. What's the pre-market low in the SPY today? The pre-market low is 423.54. So we're 60 cents off that right now. Yeah. Hasn't been a great day so far.
Wait, no, this can't be real. Is this real?
What?
Zoom's stock is back down to where it was before COVID. That's insane. To have a business grow that much in a 2-year span and your stock price hasn't moved enough. I mean, it's moved obviously, but effectively.
So they've come full circle.
If you, as the pandemic was breaking out, said, okay, we're gonna move work more virtually.
It's not quite back to where it was before COVID.
I don't know. Look at the February. I'm looking at.
Well, yeah, but like April of
that was during COVID.
That was during COVID. Yeah.
Right. So that was after. Yeah. I'm saying, okay, March 6th, 2020. March 6th, the stock was trading at $114 a share.
Yeah. All right.
I'm saying you said, oh, this is going to be a good stock. You were so right. It went up 400%. And if you held on, you're right, but you don't have any gains to speak for it. I mean, that's insane.
Yeah.
That is insane to me.
Yeah. Pretty wild stuff. We got to talk about Bed Bath. Okay.
Oh, also, before we get to Bed Bath, because I saw this earlier going across CNBC, they were talking, and this will be a good transition into Bed Bath because we're talking about retail.
Okay.
They had a headline up about Kohl's, that I guess Kohl's is reinventing their whole deal. Kohl's is reinventing the wheel, you could say. That's what they said.
Whoa. Down 8% today? What the heck?
I mean, to me, this was kind of like a Facebook metaverse. You know, it's like they're trying to pivot. You know, it's like they're struggling so bad.
All right. Wait. They have an investor day today, right? It helps to know when companies have their investor day. We have all the headlines in Benzinga Pro. I didn't see it till just now. They gave long-term sales growth guidance in the low single-digit range, EPS growth in the mid to high single-digit range. Talked about growing their Sephora unit, which is the jewelry, right?
Makeup.
Sorry, same thing. Tomato.
Not the same thing.
Okay. Expects to open 100 new stores in the next 4 years, and you're going to open smaller stores. That's interesting. So I was in Kohl's. Not this past weekend, but the weekend before that, for the first time since before COVID, and it was empty. Not that says anything, because I one Saturday afternoon does not mean anything in the grand scheme of things, and it's just one store. But man, was it a ghost town there? And I know that like Kohl's has really like doubled down on the whole Amazon return thing. You can return your crap that you bought on Amazon, you can return it to Kohl's, and Kohl's will return it to Amazon for you. Maybe that's the future. It is just every big box retail store being an Amazon hub in its own way.
Well, that's what I'm curious about, because I've never done this before in my life. If I order something online, and especially off Amazon, and it doesn't fit or is broken and doesn't, I just eat the loss. I mean, I'm not going to go through. Well, I mean, to a degree, right? Like if it's
you don't return stuff if you don't like it.
If I order,
it's just a hassle.
If I order like a T-shirt, like I'm saying, there's obviously a level. Which I don't think I've ever even ordered anything like that expensive online. But if I ordered, say, like a $200 jacket and it came in and didn't fit, I would return that.
Okay,
I would go through. But For the most part, anything I order, it's typically under, $30 or so.
You eat it.
I'll just eat the loss because it's like not where, it's just too much of a hassle. I ordered something off Amazon that I found out before it got to my place. I don't have a need for it. So now I have this unopened Amazon package that I want to return. And I honestly don't know the best way to do it.
Go to Kohl's.
Is that the answer? Is that really the easiest way to do it?
Wait, I'm sorry. What's the package? Did you say what the package was?
It's a PS4 controller, but I found out I don't need it anymore. But it's still, I haven't opened it. It's still in the, it's not even haven't opened the controller. It's still in the Amazon box. Like, can't I just leave it and let the Amazon guy take it next time he drops off my packages?
No, because he has to go back to from which it came. Like you can, it's going to be set to be delivered to your house, which where is delivered. So
Okay, so my question to the audience,
so
is
go
that my best option?
go to Kohl's.
All right.
And although and when I was in Kohl's though, I was there for I don't know 45 minutes, an hour trying on shoes and stuff.
Right.
And I walked out, didn't buy anything. We both tried on clothes, and neither of us actually bought anything. So getting in the store was only half the battle. Getting people to spend money is the other half. So I don't know how they do that. I've always liked shopping at Kohl's. But I don't know how. I don't know. I mean, it's big box retail. If that's what you want to own, then I guess go for it. On the chart, on the daily, let's go to a weekly. Actually, that's probably going to be a little more. Yeah, that's better. Yeah, like I mean, you already filled that gap once, so I don't know. Kohl's is tough.
Wait, Hex is saying there's a market for reselling returned items. I don't know what that means.
Oh, couldn't you just throw it up on?
Oh, I could.
You just throw it up on Facebook store, or?
Oh, see, Lisa Lee. This is why I don't just ask Spencer. I ask the chat. I can print return label. I mean, that's easier than going to Kohl's.
Is it? You have to go to FedEx to do that, can't you?
No, you can
Don't
print
you?
it from your home printer.
Do you have a print? Do you have a printer?
Well, I would print it here.
Yeah. Okay.
And then I'd scotch tape it.
I
don't even know if I have scotch tape.
I
but I'd
don't.
put
I
it on
don't
the
have.
box.
I don't own, and probably will never own a printer. I think in my life. Why should I have a printer?
There was a time like in like the mid 2000, from like 2005 to like 2010, you like needed a printer.
Okay, I'm gonna do a survey in the chat. Do you own a printer? Is the question I want to know.
Although I will say printers have gotten exponentially cheaper over the last like 10 years or so. So now you can get like a printer scanner combo for like $90. It's probably worth having.
I'm making
It's probably worth having.
I'm making a survey. Hold on, it's gonna take me 10 seconds here. Give me a minute. I'm creating a poll.
Wait, home printers are scams? How are they scams?
Don't answer the question yet. Hold on.
Is the ink?
Yeah, the ink is
expensive,
the ink is the scam.
Oh, the ink is the scam?
Do you own a printer? Yes or no? I have to know. I don't own a printer. I'm a young person.
Dude, we had like a color printer, and when I was a kid, I would like print like full like a Google image.
Yeah.
Just like on a, like, I was thinking about how much ink.
Kill the cartridge, man.
Literally in one.
Just
in
kill
one
the cartridge.
Page. I would like
Gosh.
print like a.
Ah.
Oh, DK has two, and neither work.
That's what I'm talking about. Yes, I'm seeing 88% yes right now. No, I have never owned a printer as an adult. Granted, I'm barely an adult, but
Did you in college? Did you have like you had a certain amount allotted that you were like allowed to print, and then if you went over, you got like charged on your student?
I don't remember.
Oh, we did.
I did have a printer in college.
Oh, like your own?
Yes,
I would just go use like.
I had my own printer in college. Well, I needed it because I would always like wait till the last minute to write papers, so I would have to like print it right before.
Hex, I gotta learn more about this, but I'm confused. Who are people buying the pallets of returned items from? Is Amazon selling these pallets of returned items?
I just listened to a podcast about this.
Then you should know the answer.
Crap. What was the store though? It was on Planet Money. If anyone listens to this,
Shout out NPR.
they did a podcast recently where they follow these two girls and they go to the store, and the store itself, it's I don't know what you call it, a secondary store where they basically just have a bunch of all these goods that have been returned, and you can just go in and like basically just dumpster dive, buy the stuff from the store, and if you know that like the PS4 controller market is really hot right now, you buy it at the store and just sell it online for at a premium. I don't know what that store is called though. There was just a whole episode about that, but
Well, it kind of reminds me.
know.
There's a way you can buy old like storage units that are not being used, or
Yes.
like that haven't been used in a while,
Yes.
and like it's a mystery box. Like you can buy one for $1,000 and you don't know what's inside of it.
That's true.
There's a chance you open it and you make a lot of money because the valuables inside are worth a lot more than $1,000, or
true.
it's a bunch of junk and you are out $1,000. It's kind of like a fun lottery ticket.
that's true. Okay, before we get to our first guest, we got to talk Bed Bath, man. Speaking of retail and returning stuff, Bed Bath & Beyond is your trending stock of the day. I got to admit, I did not see this coming.
Wait, also we just had a big red candle on good old Bed Bath.
Oh, wait. Let's bring up the chart.
Yeah, if you want to go to like a 10-minute,
15-minute chart. Let's go.
15, I'll compromise.
Where are we at? Here we go. Okay.
Took a bit.
You can see exactly.
That's a really nice chart, actually.
You can see exactly where I got suckered into this. I got suckered in right here. Right there.
No, you didn't.
Yes, I did.
No, yours. Wait.
First green candle of the day on the 15-minute chart.
Up there, your mouse was showing that you were going over like the last red candle.
Dude, why is my mouse not... Wait, what the... Can you guys see? Where is my
No,
mouse?
I can see the crosshair from where you're like actually at, but up on the screen, it's showing your mouse down by like.
I
the
know.
last red
I know.
candle.
It's very confusing.
Okay.
I hope you all can see that my mouse is on the 10:15 a.m. candle
No.
because that's where my mouse is. Should I just refresh my screen? I don't know what's going on.
I've never seen this happen before.
Yeah, there's a weird like lag on my cursor. It makes no sense. All right, let's refresh my Pro. Let's try it again. They may have to maybe it's just a TV issue up here on our end. That's better, I think. Okay, so I got suckered in right. No, it's not better. Gee, what is going on? All right, I got suckered in on the first green bar of the day at 10:15. I saw that green candle and I bought. I think I bought at what was my cost basis? 25 something. Set a stop that Zuniata told me to set at 23.85. So got filled on that. 20 minutes later, and that was the end of my trade. This is a very interesting dynamic. If you had asked me at 9 a.m., what does Bed Bath hit first? Does it hit 60 or does it hit 20? I would have said 60. For sure, I would have said 60. I would have been dead wrong.
Yeah, I mean, we have recent history in our minds, of course, with GameStop, AMC. I mean, most recently, which I'm sure we'll talk about this today too, INDO. I mean, holy cow. And remind you guys, if you're avid watchers of this show, we had the stock market wolf on this show. Actually, can someone remind me, can we get a clip of that from, he was on the show, I'll get the exact time. He gave INDO, not Bed Bath & Beyond, gave INDO Indonesia Energy at, I believe, $5.50 a share.
Oh my gosh.
It's up to $70 now. So I don't know if anyone, was listening to Stock Market Wolf and got into that trade at $5.50, you have a nice return there. My question is, which not ethically or morally, but like legally, could Ryan Cohen have bought his 10% stake last week and sold it this morning?
Yes.
Legally speaking, I would have if I were him. I mean, that's the easiest. I mean, what's 10? You buy 10% of a company, the stock's up 60% the next day. I mean,
Yes.
that's the easiest money in the world.
Yes.
Why would like, I hope.
Yes.
I mean, I don't hope he sold this for other people like you, Spencer. That have gone out and bought this.
He's allowed to do that.
I would have 100% sold. If not,
I mean, it's hard not
all
to.
of the position.
It's hard.
60%. That's like two. I mean, think about that. If you got 60% over 3 years, you're hitting 20% a year. That's great returns. You do 60%.
He did it
in
one
a
day.
week,
One day. He did it one day.
One day. That's amazing. I'm trimming my position there all day long.
Now we're not going to really know. I'm sure he didn't sell, but if he did, we're not going to know until May 15th.
Well, if he did,
We're not going to know until
or
May 15th if he sold.
If he did, I mean, the court of public opinion is harsh. He would become he would surpass Chamath as becoming like the new.
I mean,
public enemy
you
number one.
you only get that bullet once.
Well, that's what I'm saying.
You only get
But
that once.
Here's the question.
If you're gonna do it now, that's it.
I know, and then he just rides off in the sunset. We'll never hear of Ryan Cohen again. But I want to know, like, how much the 10%, which this would be really easy to find out, how much the 10% stake was worth, how much.
Not a 10% stake. That's important.
Was 9 points.
That's no. It's very important. It's not a 10% stake, because if you did take a 10% stake, then he's required to tell the market when he sells. That is why. Okay. That is why he took That's why he took a 9.8% stake and not a 10% stake. You take 10% stake in the company, you have to have a Form 4 filing when you sell.
That is a good point. But the point I was going to make was, and I don't know off the top of my head how much this 9.8% stake was worth. I mean, we can look at the market cap and figure it out pretty quickly. But is that 60% gain or whatever Bed Bath & Beyond opened this morning?
I'm 100%.
It opened 100%?
Wait, let's see. What did we close at? We closed at $16. $16 we closed at. 16, 18, whatever. And we got to... Oh, what the hell? There we go. We got to 35 this morning. That was on the pre-market. From 16 to 35 in one day. So yeah, it more than doubled.
Shout out Ashton. He's saying May 15th is his birthday. Shout out.
Wait. Who said that?
Ashton. Is that your birthday as well?
Ashton, man. That's my birthday too.
I'm May 5th, so shout out Taurus gang. What Empower saying did not hold PM levels, obvious short, which Bed Bath & Beyond did not hold last night's levels?
No, saying pre-market.
I read PM as like evening.
No.
All right, that's a good point. We oftentimes
you can see after obviously now.
No, I was just gonna say it's a good point that you can use pre-market levels a lot of times to determine if the stock is going to run or if it's going to give up a lot of those gains. Okay, but bottom line, market cap right now for Bed Bath & Beyond is about 1.5 bill, which it's obviously up 27% today or whatever. So say it's a $1 billion company. Say Cohen bought 9.8%, so his stake is worth 100 mil, up 100%. Is that $100 million profit? I mean, okay, we'll call it 60 million after taxes.
Is it worth it to use that one shot?
Is it worth it to use that one bullet to know that you have retail investors for the rest of your life hate you? I think I would. I think I'd take that 60 mil right off into the sunset. Hey, you're never gonna hear from me again. But yeah, I mean,
you're asking for the SEC to be knocking on your door if you do that. So,
but it's not as if
his fault.
It's not as if he had any info. It's just his influence that he bought the stake, and then this gets out there and causes the stock to run.
The government will find a way.
Part of the reason this stock is running is because of the short interest. So it's not just solely Ryan Cohen bought into Bed Bath & Beyond. It's up 100%. No, it's Ryan Cohen bought into Bed Bath & Beyond. You have a positive catalyst. Now shorts are covering. So it's all cumulative. I don't think the SEC would have a case if he bought last week.
No, I think you'd be surprised. I think they would have a case.
What I will say, and our first guest is here waiting, so we will get to him. What I will say is, he knows what he's doing. He picked a stock that has retail interest, has short interest.
Yeah, it's a short interest of like 60%.
Has even his letter, like he was talking about NFTs, like he was just playing into the cards. So I mean, it seems so obvious, like he knows what he's doing and he is willing to do it. But I doubt he's sold today. I don't think he will. But
let's pivot here from stocks to Forex. Craig Erlam is a senior market analyst at OANDA. And there's a lot of crazy stuff happening right now in the global Forex market. So let's get Craig's thoughts on the show and give Craig our new special intro, because that's what special guests get. They get the special intro. Craig, what's up?
How's it going? Big fan of the special intro.
Thank you. We did it just for you. So
I'm a big fan of the monitors.
Yeah, nice setup back there. He's got the quad screen with the Bloomberg up there. Yeah.
I've got some real life NFTs behind me.
Very
great.
cool.
Craig, give us the 30,000 foot view. What exactly is going on right now in Forex land? Things are pretty crazy.
Things are pretty crazy everywhere. Forex is just one area, but yeah, it's so hard right now. There's so much uncertainty around, and I think in my 10, 15 years of working in the markets, this feels like the most headline-driven market I've ever worked in. One where every minute of every day we're waiting for big headlines to appear, and they are appearing, and the markets are reacting really quickly to them. So we're seeing immense amounts of volatility everywhere, and no matter where you look, there's no market that's boring. There's no market that's flat. And intraday, over the weekend, with an immense volatility and immense moves. You look at even oil markets. I know we were talking about Forex, but you look at oil markets bouncing 18% overnight. I mean, that's incredible. Well, I can't think of a time when I've seen anything like this.
I think Forex and commodities are probably your two craziest markets. You've got wheat lock limit up right now. Like, that's not going to trade for the rest of the day. I mean, there's just a ton of crazy stuff happening. How the conversations that you're having with clients, how are those going in terms of, I don't know, fear or greed index, if you want to rank it somewhere on there?
Well, like I say, it's extremely difficult because I think most people will agree that volatility is good in the markets. You want to see volatility, but in like I say, in such headline-driven markets, that makes life extremely difficult because you're not trying to anticipate the market direction. You're not trying to anticipate necessarily where you think things will go. You're also trying to anticipate what random comments someone's going to say. That can be anything from Blinken over the weekend in relation to the potential for Europe joining the US and banning oil imports, which Germany's pushed back against today. It could be Liz Truss here in the UK talking about potentially people agreeing that if people want to go over to the Ukraine and fight from the UK, then they can. I mean, the knock-on effects of every word that comes out of so many people's mouths right now can be enormous. And that's what we're seeing in the market. So I think the first thing I always say to anyone is I'm just urging caution, because be aware what you're getting involved in, because right now these markets, it's got excessive amounts of volatility, and therefore if you're taking the dive in those kind of conditions, you need to know what you're getting yourself in for. And first things first, protect yourself.
Yeah, sorry, go ahead.
Craig, have you been following the Polish currency?
Zloty?
Zloty.
Well, I know that a lot of the currencies over on the eastern side are coming under quite a lot of heavy pressure. Obviously, the proximity to the what's happening in the Ukraine is having quite a detrimental impact in a number of different cases. The Polish zloty I don't follow overly closely individually, but I know that a lot of the currencies over that way are coming under quite a lot of pressure.
Yeah, the reason I asked, I thought that was interesting. Over the weekend, so last Friday, just to give some context, the Polish zloty over the past week alone is down more than 7% against the U.S. dollar. And last Friday, the whatever the central bank is of Poland stepped in and tried to, stabilize the currency so it wouldn't drop further. But it didn't seem to work last night when or Sunday evening when the futures opened or whatever. It was down another 1.5%, and a lot of people are worried that this currency could full on collapse. I mean, what does a central bank even do at that point if you are worried about a currency full on collapsing?
Well, I think like we've seen in a number of different cases, a lot of central banks who are being very active right now. Obviously, the Central Bank of Russia tried to support its currency prior to the sanctions being imposed upon it. We've obviously seen the Swiss National Bank is talking about supporting its currency as well. And yeah, I think there's a number of those countries in the Eastern Bloc who are also doing the same thing. You've got to remember, a lot of these central banks have enormous amounts of foreign reserves. So at least over the short to medium term, there's a lot that they can do to continue to support the currency, and it won't always work perfectly. But we've seen that if it slows the moves and if it avoids too much damage being sustained, then there's a lot that they can do in that time. If that's not working, then you are talking about the potential for things like capital controls and things like that to be put in place, and other excessive measures stopping short sales. For example, we've seen if we want a lesson in what central banks can do to stem currency moves, then look no further than Turkey. Their central bank, the CBRT, has been extremely active in the markets now over the course of the last couple of years. The last 6 months in particular have been very active in and we've seen what the currency will still have massive downside moves potentially, but it's all about limiting those downside moves and trying to find some stabilization in the markets, which there's different ways that can be achieved. The first one, though, is using some of those foreign reserves and trying to stabilize the currency that way.
No, it's funny you mentioned Turkey. I hadn't thought about that for a minute because they were lowering their rates, right? And that was a hot topic for like a week or so, but that was months ago. I had forgotten about it until you mentioned it just now, Craig. Also, this is the first time that the Polish zloty has ever come up in conversation on this show, I think. So
I think so too.
Pretty wild times we are in. Craig, the chat is asking where your accent's from. The consensus seems to be Liverpool. Is that a good guess?
Absolutely. I'm from 30 minutes from Liverpool.
Hey, there we go. Chat, you guys are good. What other markets are you watching right now? I mean, you said it earlier. In theory, volatility should be good, but it also increases risks of things like margin calls and the like. And just what other markets are like top of mind for you? And we didn't even talk about our central bank yet, our Federal Reserve in the U.S. that's going to meet next week.
Absolutely. I think I think there's a lot of jobs in the world I wouldn't want right now, but central bank is certainly one of them. You're fighting. There's so many different things which you're having to contend with right now. You've got levels of inflation that we've not seen in 3 decades. You've got the economy's slowing down, and now we're recovering from a global pandemic, trying to find out how things stand, how countries are formatted in many ways in the post-pandemic period. And then you just throw in an invasion of Ukraine into the mix, and the impact that can have on oil prices. We're obviously seeing at the moment, but also other commodities, things like palladium. I think Russia supplies around 40% of the world's palladium. So we're obviously seeing a lot of movement there. I think we saw a similar move there that we saw in oil at the start of trading this morning as well. So like I said, there's so many markets, and this is even before you look at equity markets, the kind of bread and butter of the markets, which you look today and we're 3, 4, 5% down in Europe, and then shortly around the US.
Not anymore.
In the green. I mean, it's incredible.
I know. As I said, I was saying earlier today, you know, if you only looked at your screens like Eastern time at 6:30 a.m., 9:30 a.m., and 11:30 a.m., you saw 3 vastly different things happening at any given time. It's very, very difficult to trade. I'm just curious though, like based on conversations you're having with clients, what is the general sentiment? Because prior to the Ukraine-Russia war, sentiment was pretty much hinged on the interest rate environment here in the U.S. and that going from a near zero to a rising rate environment. That's been confirmed now, and there was a lot of ink spilled and words said about, you know, what a rising rate environment does for things like technology, and that was the overhang here. And now we have another overhang with the war. But in terms of just overall sentiment out there, if you can gauge it for us in some way, shape, or form, how is it right now?
I mean, the thing is we're looking at a situation obviously right now where the entire focus is on what's happening in Ukraine, and there's no getting away from that. It's very difficult to talk about the European Central Bank this week, to talk about US inflation data this week, when you're going against the backdrop of a war in Ukraine, and the videos and the images and the stories, etc., and the reports that we're seeing coming from there.
Insane.
So it's hard for that not to be having an extremely dampening effect and sobering effect on the markets. Suddenly, we're talking about these kind of almost once in a generation moves, or although the last decade has been quite active, we're talking about these potential once in a generation moves in the markets. But against that kind of backdrop, it is extremely sobering. So there is a very downbeat sentiment that we are seeing in the markets right now, because, like you say, even when you take the Ukraine situation out of it, which is extremely difficult, we were already talking about markets where there was already a lot of concern about, are interest rates going to rise too far? Are they going to have to rise too fast? Is it going to deal with inflation as much as it should? Or will we have to see much higher levels of interest rates the type of which we haven't dealt with for 15 years, and many of us, and there's going to be a lot of people who have never seen rates above 1 or 2%. So is that going to be hard to contend with? Throw in $150 oil potentially into the mix, and extremely high energy prices here in the UK, for example. All the chatters about energy prices, what's going to happen, 50-60% rises in household bills. What impact is that going to have on the economy? What impact is it going to have on jobs? This type of thing is what all the chatter is right now. And unfortunately, it is very, very negative. And I think the next few months is just going to be really challenging as we start to contend with that. We start to get hopefully some more clarity on hopefully some positive moves in terms of what we're seeing in the Ukraine, but hopefully as well also some more clarity on how inflation is looking, maybe on a slightly better trajectory. Going into the middle of the year, I think it's going to be challenging. We've just got to hope that from then onwards that we start to see things improving. But ultimately, that will rely entirely in many ways on what happens in Ukraine, because if inflation broadly starts to move in the right direction, but oil prices are $150 plus, who's going to notice?
And that's the scariest part is normally inflation would be priority numero uno, and it's taking a back seat it should when there's a freaking war going on, right? But that's scary, right? It's like inflation is a huge problem, and it's not even problem number one. It's problem number two. Yeah. So like, oh exactly. Gosh.
But as far as the central banks are concerned, it has to be problem number one, because it's all well and good saying we need to look after the economy. But if you look after the economy and 3 months later inflation's still rising, then the economy's going to take a double hit when interest rates are rising twice as fast, and we've still got high levels of inflation. So that's going to be the challenging thing. That's why the turn at the middle of the year is going to be so important, because at that point we're going to see, is inflation heading in the right direction once again, and can central banks start to take the foot off the gas, especially if we are dealing with $150 oil? Central banks will look through inflation driven by high energy prices because it will be seen as temporary, and ultimately raising interest rates isn't going to make that any better. It's not going to change the price of oil. What they're trying to deal with right now is what we're seeing ultimately, which is companies are raising prices and consumers are willing to pay it, and they're getting higher wages. It's that type of dynamic which the Fed wants to deal with right now, and other central banks around the world, because that's something that has the potential to spiral out of control. They can't do anything about oil prices.
So Craig, since we're talking about inflation, I should know that CPI in the US CPI is out Thursday, 8:30 a.m. Eastern time. It's one thing to guess the number. It's a whole other thing to guess the market's reaction to that number. Do you have any thoughts about Thursday?
So there's a part of me that says it has to be something quite shocking to really cause any spiral. I think a number below doesn't get anyone too excited. A number roughly in line doesn't get anyone too excited, and even enough numbers slightly above, we're kind of used to that now. It has a numbing effect. I feel like I can't remember the last time inflation was below what the market forecast was. It always seems to be 0.5 percentage point above on an annual basis. So I think really anything up into kind of 0.3% above what the market forecast is, and I'm not sure entirely what the consensus number is at this point. But anything with kind of 0.3% above that, I think the market will just absorb, especially in this environment, because it just isn't focus number one. But again, if we start talking about 0.5 percentage point more, then I think that's just going to really add to the doom and gloom that we're seeing in the markets already. There's just that part of me, and I've been like this since the 1st of January. We just need to get through to May, because that's when we'll start to see inflation data that's going to start telling us what's going to happen post-peak and what type of trajectory we're going to be on. And I think then we might start to see the data very differently. Of course, from the 1st of January through to 2 weeks ago, I wasn't really contending with war in Ukraine and $130, $140, $150 oil. But I think, I think the next few months is just going to be so critical.
I'm sort of, it literally brings me back to when I was a kid, because growing up, oil was like $4.50 a gallon here in the U.S., and I literally was like, oh, that sucked for the adults, but I'll never have to deal with that in my life as an adult. Well, here I am dealing with that now as an adult. So, it's tough. Craig Erlam is a senior market analyst at OANDA. Craig, appreciate the time. Thanks for coming on today.
Thank you very much for having me.
Alrighty.
Wait.
What? Sorry.
Did
you have a question? Did I?
No.
Okay.
No. Although I will say, Craig mentioned a once in a generational moment here where we're seeing. How many once in a generational moments are we going to get in a decade?
I keep going back to if you're watching Pre-Market Prep last week, we had Angie Setzer on the show. She's a commodities professional, and she said, I think I'm going to paraphrase her quote here, but she said she's lost count of the number of black swan events she's seen in the last 2 years. It's a never-ending stream.
That's an easy count. COVID, the war, too.
No,
what
no,
else are you
no.
gonna throw
But
in? There's a black swan. There's a true black swan event.
Well, in commodity land, there's been more than that. There's been droughts. There's been
Okay.
Now you have supply.
Lumber
Now you have
going
a
crazy.
you have a
Okay.
major supply
that's not-
shock.
but a black-
Lumber, that's a black swan. Wheat now is a black swan.
Really? Okay.
Oh, for sure.
Have you read
No,
Nicholas Taleb's book?
black swan.
Yeah.
No, it's on my list.
It's also on my list.
Guys, my list of books. Maybe we should do a whole show one day,
book club?
or a segment about books to read. Because
I actually got a library card yesterday. Royal Oak.
having fun isn't hard, man.
I know.
When you have a library
A
card.
library is like a gym, but for your brain.
I have been. I go through my reading is very
Sporadic.
Sporadic. Thank you. There are weekends where I will read like the whole weekend and just plow through a book, and then I may not read again for like months. So
I'm with you there.
Sadat says it's really convoluted. I believe it.
What, the Black Swan?
Yeah.
There's no one out there, author, thought lead, thinker, whatever, that doesn't have like valid criticism out there. And I know there is a lot of valid criticism about
That book?
no, not the book, just Taleb in general.
Okay.
Him and Steve Pinker get into it a lot, or had a big.
I don't know who Steve Pinker is.
Steve Pinker wrote The Blank Slate. He's a big
I don't know who that is. I don't know what that is.
Pinker. It's like he's basically a proponent of like nature over nurture. Like he's like everything is determined by your genes, nothing else matters.
Okay.
And it's like he
Cool.
anyway.
Wait, I forgot something earlier, Aaron. We were having a conversation about birthdays, right? We forgot to mention whose birthday it is.
Jason Raznick.
Jason Raznick, if you're watching, this is for you. See that? Look at that. Beautiful. That's all. That's all we got for you, Raz. Happy birthday, Raz. He's 38 years young. No, he's not 38 years young, but he looks like it. I don't know. Happy birthday, Raz. I don't actually know I don't actually know how old he is. You're still on mic, Aaron. I don't know if you realize that. Someone just called Aaron, so he had to take a call, apparently.
Hello.
He's going to do that on the show. I don't know how old Raz is, but happy birthday, Raz. I want to say he's like 44. Don't quote me on that. I don't actually know. Happy birthday, Raz. Birthdays are the best kinds of days, is what they always say, right? Speaking of Raz, I'm trying to get Raz on the back on pre-market prep. I think maybe on Thursday. Don't want to. It's not locked down yet. Not locked down, but I think I'm hoping this Thursday, maybe on pre-market prep, we can get Jason on the show. Just trying, playing on the seed now. Throwing it out there. All right, it is 12:21 on the East Coast. We're gonna have, I think, Matt Hammond. I hope Matt Hammond can join us today. I know he is. He's in Portugal now. You all good?
Yep.
All right, cool. He's in Portugal now. I hope he'll be able to join us. Yeah.
Continue.
No, I was just gonna say. I don't even know.
I haven't heard from Matt.
We haven't heard from Matt this morning, so we hope he's okay.
I wanted to, because I was confused. You said you. All right.
Whoa! Wait. What is this?
This is U.S. all grades of retail gasoline prices.
Oh, sweet. Is this like an average of average of the three grades? What is it?
I don't know. I don't know if
it's
they're
just
throwing diesel in there. I don't know.
It's just an average. Okay.
I have no clue.
Cool. No. Let's look at this.
So you said like when you were a kid.
Yeah.
So I'm guessing right here around 2008.
Yeah.
How old are you then?
I was 17.
17.
Yeah.
Okay, so you were driving at that point.
Yeah, I was driving.
So this is when kind of for now the peak June, July of 2008. And mind you, this is
I was driving, but
not paying your gas?
No, I guess I was paying because I had a job, so I guess I was paying for gas.
I
wasn't driving a lot. I was driving around my hometown. It wasn't like I was driving like distances. You know what I mean? I was going like 5 miles here, 2 miles there, right? So
I was like 11, 12 in this 2007, 2008, and like I had no clue really how bad things were. Like, I remember talking to my dad about it like after the fact, like. And my dad was like in the markets, like investing, like had lost a lot of money. And he's like, you don't remember? He's like, whatever. Was like, you know, like so down, like depressed that whole year, whatever. And I was like, oh, I don't really remember that, whatever. But it's so interesting seeing the next year. So June of the next year after 2008. So this is when things are really bad with the recession and gas is so high.
Yep.
Gas had dropped like $1.50 down to 260.
Yep.
And then this right here is what I started driving in 2013, 14, 15. And gas, I remember like filling up at 380, 370, being like, this is bullshit. It's fucking costing me like
380, please.
Well, that's where we're back. We're back to that right now. I mean,
yeah.
Also,
no,
look, do you remember this?
We're above.
Do you remember this right when COVID hit?
Yeah, that was amazing.
At one point, I have a picture of it.
That was amazing.
Because I was in like Columbia, Missouri, like smack dab in the middle of Missouri. I'm pretty sure at one point I filled up my tank at what was less than $1 a gallon. I want to say it was like $98 a gallon. I'll never have that again in my lifetime.
So here, can I just like do a quick? Because I keep a monthly spreadsheet. I think I've done this once before. I can bring up and tell you how much money I spent on gas in the spring of 2020. I think over like a 6-month span, I spent like, I don't know, $100 total on gas. It was ridiculous.
During that, well, you also weren't driving.
Yeah, I wasn't going anywhere. Yeah, I wasn't driving, which is true. What was I about to say? Oh yeah, on the gas thing. It was so weird too because it was ironic in a way because gas prices were peaking like really bad, right? 07, 08, and that was also several years after Hummers. Remember how Hummers were like the most popular car? Every cool celebrity had a Hummer or a Jeep
LeBron
or a Cadillac Escalade. These things that get like 5 miles to the gallon and take like, they just have these ridiculously poor mileage. And then gas shot up and those things like died. Like no one had a Hummer anymore after that, I feel like, because.
Well, that's what's interesting. I mean, and you can see it in just prices of SUVs. When gas prices go up, prices for SUVs go down. When gas goes down, prices for SUVs go up. And my question is, are we going to see the same effects in terms of EVs? Like, are we going to see a huge spike in demand for EVs right now with gas prices rising? And sorry, I'm on my phone. I'm trying to find this picture.
That's the thought. That's the guess. I mean, Tesla's having a good day, right?
Are they still? Because they were up about 3% and then went red.
Oh, really? I didn't see Tesla go red. Let's take. Oh yeah, wow! Tesla went red.
Is it still red?
Every sector is red right now except for utilities. XLU is your own. Even energy. Someone just noted that in the chat. Every sector is down except for utilities. This is a pure defensive day right now. Let me bring up my Pro. You can see that. So it's enough of the gas chart. We don't need to see that anymore.
Yeah, there's a lot of numbers.
We don't.
I'm trying to find this picture. I know I took a picture at the gas pump.
There we go. All right, enough of that. Yeah, I remember the SUV market just like it was like overnight. Everyone wanted to drive an Escalade and a Hummer, and then nobody wanted to drive an Escalade and a Hummer. Pretty funny how things work out like that. So, yeah, I mean, I've always kind of thought, because I bought a used car in 2017.
The same one you have now?
The one I have now.
Oh, wow.
And I've always kind of thought that like that'll be my last gas guzzling car.
Whoa,
like,
wait, hold on.
like the next car that I buy will be like an EV of some kind. Right.
The first stock we looked at today was Lockheed Martin.
Yeah.
I said, also, what is Luke doing in on your desk right now? Should we be concerned about that?
Dude, why is Luke sitting at my desk?
Should we be concerned?
Can we get the overhead camera, please, Rohan?
Please.
Rohan.
Rohan?
Is he even at his desk?
I don't think so.
Hey, Aaron. Aaron Thomas. Yeah, I'm talking to you. I'm talking to you, Aaron Thomas.
Aaron just he just threw down his sandwich and said, I'm fucking done with this bullshit, Spencer.
I'm talking to you, Aaron Thomas. You know what I was going to say.
So also, I don't know if Raz is watching right now. I do want to, before this week is over, remind me, I want to prank call Raz live on the show. And I was going to do it today, but I didn't even realize it was his birthday. But I want to know, like, what would be the funniest prank? Because the thing I had in my head was, like, what if I was like, oh, I'm so sorry. Like, I was playing catch with Aaron in the office, and I broke one of the glass panels.
The glass panel.
Like, do you think he'd believe
We
it?
haven't pranked Raz in Raz is due for a pranking.
Well, I think he'd believe it that like it'd be something I would do. The problem is he'd be like immediately like send me a picture, or send me a video.
True.
True. So that would dismiss it pretty quickly. So I'm trying to think of like other funny.
I
pranks.
did damage to the office once.
What'd you do?
There's a dent in a wall over like in the back there. Look, that's Luke at my desk.
Oh, he's on your Twitter, dude.
Dude, I swear. No, I can't tell where he's looking at right now.
Okay, he's either on Slack or
no,
Twitter.
I think he's on Thinkorswim.
Oh, really?
Yeah, dude, I swear, Luke, I'm gonna.
Oh,
Dude, he's on my Twitter. Luke,
he's the one that's been following all those weird accounts you follow.
Luke does sign me up for shit. He signs me up for emails. No. So anyway, there's Randy. What was I saying?
Oh, you know what would be Inception, AT, is if you zoomed in on the back view of that camera and it gave us the same view we're seeing now.
Weird. No, but what I was saying was there's a dent over on the wall over there because we used to have this scooter that didn't really work. It's like
a bird scooter?
No, it was like I don't know how it's like a little motorcycle scooter thing. Anyway.
Oh, like you sit down.
You sit down. Anyway, and I drove it into the wall not long after we moved in here, and there's like a divot in the wall there, and I put it on Snapchat because it was funny. And then Raz and I, that was the moment when I realized that Raz and I were friends on Snapchat because he replied and he was not happy. So I was like, nope, unfriend. Don't want to be friends with him anymore.
All right, so we'll keep brainstorming some good pranks on Raz. He is due.
Yeah.
This is J-Raz prank BD call. I don't know what that means.
I don't know either. We will prank call Raz. We got to figure out how though. The glass thing, as good idea as that is, he would ask for proof.
Right away, and then it'd be like we wouldn't have. Unless Rohan's like really, really good at Photoshop,
which he's not.
Well,
Rohan's not even here, man.
Well, if like one of our editors out there is like really good at Photoshop,
All right.
I don't know. I guess I'll keep thinking of it too. But anyway, I brought up Lockheed Martin because when we looked at it earlier in the show,
Let's bring up
well, here I'll pull up.
I'll get it up on the screen. LMT. Whoa!
Can I pull it up on my screen?
Yeah, go.
Because your cursor's all messed up.
Yeah, apparently so. My cursor doesn't want to work today.
All right. This is not Lockheed. This is Chevron.
Okay, we don't want that.
No. Let me go to LMT, limited, as Mr. David Green would call it.
Why?
So we were, and we can see right here because it was 11:30 right when we started the show.
Your timing is impeccable.
Yeah, it was 11:30, and I was like, "Hey, look, we just got up," which it looks like we had surpassed previous highs of the day. Why does my chart not look good? Why is there so much space like not being taken up by the chart?
Dude, you gotta zoom out.
Okay, yeah, it's working, Spencer.
Yeah, but your axes are all. It's too hard to see the numbers on the axes. But.
All right, I'll tell you the numbers.
Okay.
All right. Well, actually, no, I don't even know. All right. Either way, when we hit this level, and we're on a 5-minute chart here, by the way. When we hit this level up here, it looked like we had broken new intraday's highs because this candle is higher than this candle. But if you looked at the actual what we got up to, it hit just in line with it, and then we started trading lower. So we got that kind of failure to make new highs, kind of double top. I got in on a put. It's up about 55%. Can't sell it because I already used all my day trades on Robinhood, so I'm stuck holding this till tomorrow. But bottom line was, and I'm not like the hugest chart guy, but something like a double top, like it makes logical sense to me too, right? Like you get to this point, you have two options once you get back to this point. You are either going to go past it. I guess three options. You could just sit and trade sideways at that point, which we rarely see, but you can either break through that and make new highs and it sets up for a trade to the upside, or you reject that level and you start trading lower. Now, that's not like an 100%. You can look out for this every single time you see a double top forming, but in my experience, more times than not, that failure to break the previous high of the day sets up for a nice little downtrend. So, yeah, I don't know if anyone else got in that trade with me or was watching, but and I don't know if we got any new. I mean, Lockheed's down? I guess it's not that much, down 1%, 2% in the last hour.
Well,
wait,
yeah.
My cursor's big, is it? I guess kind of.
Lockheed being down, I don't know what it's.
Well,
down.
wait, my cursor's doing it too. I'm over here on the. I'm like
Where's here?
exactly. Like here, I'll show you on my computer.
Must be-
I'm here.
It must be a StreamYard bug today. That's
on this
very
candle.
bizarre.
It's like down to the right.
That's very bizarre.
Do you guys remember smart boards? Did you have smart boards in?
Yes, I'm not that old.
Well, some school districts may not have enough money for smart boards.
All right,
I don't
that's
know.
fair.
But remember when we would have to calibrate them?
Yeah.
They would get all like janked up, and you'd have to calibrate them.
Yep.
Smart. That was like the funniest thing ever. Like the school spending. I don't know. I don't think we ever used them that often.
And the worst part was when an idiot would draw on it. Those things you couldn't.
Like with a real marker.
The real marker.
Yeah, we had that happen a lot of times.
That's a ruiner right there. Anyway, I don't know where Matt Hammond is. We haven't heard from. I hope he's okay. I'm gonna shoot him a.
Okay, Jay Rice is pointing out that it's, I guess everything reversed. It had nothing to do with the chart.
No.
Well, maybe it did. I don't know. Either way, it worked out. Whether it was lucky.
Yeah, everything is
nothing to do with
everything
the
is
chart.
down today. We just talked about this. Everything is down except for
But it
utilities.
wasn't. I mean, Lockheed Martin was up 4% at one point.
Yeah.
Chevron was up. Oh wow. Chevron really set up for a short trade there. Got all the way up to 162. Now down to wow. You would have made a lot of money on these Chevron puts. I was looking at those earlier today, and I've already lost so much money over the past like 2 weeks trying to short Chevron, just because I was like, all right, it's
Dude.
I'm not even expecting
No.
like the trend not to continue. Like I do
Yeah.
expect Chevron, like oil, to keep getting more expensive, like whatever. But I was just like, yeah, it's due for a red day. Like you just can't go up every single day. So I'd like be shorting it, trying to get just that little leg down, and we haven't had it yet. So
Dude, this bed bath. Oh my gosh. It might go back to 16 today, honestly. It might go back to what was that low? 20? We got to 20? 2022. Yo. We might get back down to 16. This thing is falling straight down from the open. Holy cow. It is a different market right now. If this were March of last year, Bed Bath to 50 today. Maybe 60, maybe more. Holy cow. This does not bode well for any type of rally like this. And I know there are some stocks that are making like INDO. Is that what it was?
yep.
Yeah.
Indonesia Energy. What are
Which
we at
is
now?
partly, I know it's a crazy YOLO BS squeeze crap, right? Just moving unhinged from reality. But there is also some semblance of a macro catalyst here, right? Because this is an oil play. So there is some macro catalyst. I know the stock is moving in just by itself right now. It's moving just stupidly, but at least you have a macro catalyst now. For stocks that don't have any sort of macro catalyst, like Bed Bath just has an activist stake today, big freaking whoop. This does not bode well for any type of viral meme stock movement. This does not bode well for that.
Well, I don't know. I think there is kind of a fundamental catalyst here because you have the track record. Ryan Cohen, the chewification, whatever. And he said himself that he's trying to kind of revitalize and revolutionize Bed Bath & Beyond's business. So if you see this as an opportunity for the company to either pivot or just kind of transition into a new age of Bed Bath & Beyond, then it is a catalyst. And actually, after it seems Ryan Cohen is what he's trying to do here with Bed Bath & Beyond is very
He wants them to spin stuff off.
is very Carl Icahn-esque.
Yeah, he's told the CEO he makes too much money.
Yeah, that's always been
that's
always been one of Carl Icahn's things. Which Spencer, I don't know if you've seen the documentary.
No, I knew you were gonna ask me. No, I haven't.
I'm gonna keep asking you till you watch it because it's pretty good. And I only found out about it because of you, and I
sorry.
watched it. But he, Carl Icahn, historically, famously, hates CEOs, hates big boards. Yeah. Says you guys are all sitting up here getting paid $1 million a year. What are you actually doing? And I don't know, because from what I understood from the documentary, Carl Icahn was very much like a pioneer in this kind of activist investor space. Like there weren't a lot of people doing what he did, and I don't know now. Is Ryan Cohen like the best
I don't know.
second example aside from Carl Icahn. So if you don't know,
no.
essentially what Carl Icahn does is he will buy a stake in what he has done historically, will buy a stake in a company, and then using just sheer brute force of power of will force the company to do whatever it is that he wants. So he'll see a company that he has potential. Say, I love McDonald's. Well, actually, that's not a good example because he actually is doing this with McDonald's right now.
Yeah,
Say, I love Shake Shack, but I hate their to-go mobile ordering. I think it's terrible, and I think by improving the app, we'd increase sales 50%. Essentially, what I would do is buy a stake in Shake Shack, a stake big enough that would get me a seat on the board or a couple seats on the board, and then just create havoc or chaos until I get my way and the app is redone. And then what has happened is Carl Icahn has most of the time been right.
Yeah, he's not always right, but he just likes to, he likes to create shareholder value. That's his big thing, right? Shareholder value. He thinks your stock is undervalued because of X, Y, and Z. Your operations are wrong. This is priced incorrectly. You're not in this business. You shouldn't be in that business. He proposes shakeups. Sometimes it works, sometimes it doesn't. But I don't know on the Bed Bath thing. I mean, maybe they spin off what he told them he wanted them to spin off Bye Bye Baby, which maybe
Spin off what?
The baby store that they have, Bye Bye Baby.
Baba?
Bye Bye.
Oh, well, that doesn't seem like a good store for her name.
I think it's like BUY. Bye Bye. I don't know. Anyway.
It's like,
Shoot, what was I going to talk about before? I just had something to bring up. Oh, yeah. Aaron, I was looking at a note here this morning from Wedbush.
okay.
And the note listed the 10 software/cloud stocks that are the only 10 that are still trading at 20 times price to sales ratio, 20 times sales. And Asana is on the list.
So that's bad.
It's not bad per se. It's just more of an observation that like Asana has held up relative to the rest of.
Yeah. I mean, here's the thing. Well,
it means it's still expensive, is what it means. It's still expensive. That's what that means.
And I understand everyone's going to have a different investing strategy. Some of us like to buy quote unquote cheaper stocks, stocks that have a lower PE, whatever. The only thing I'll say is if you look at a stock and see a high PE or a high price to sales ratio and that turns you off of the stock and you like everything else outside of that and you don't get into it, I would say look historically. I mean, if you would have let Amazon's PE deter you away from buying the stock, you would have missed out on 15 years of amazing gains. Same thing with Apple. Same thing. Historically, a lot of the best stocks historically trade expensive. And that's just how it goes. And of course, the pendulum swings both ways. At some point, when you do get a stock that's very expensive, high PE, whatever, growth comes out of favor. The stocks come down a lot. And a lot of times you'll see people go out and buy the low PE stocks, whether that's Johnson & Johnson, Chevron, you name it. But then right when the pendulum swings back the other way and growth is back in favor, people don't want to hold. It doesn't matter what the PE is. People don't want to hold Chevron, whatever, because it's boring, and you're not going to get as great of returns. And it's like what we talked about with Tim Quast. At the end of the day, the stock market is about what someone's willing to pay for any given name. You can, and a lot of these fundamentals in terms of PE, price to sales, play into that. They affect how much someone is willing to pay for a given name. But if a PE is 5 and no one wants to buy the stock, it doesn't matter that the PE is 5. But yeah, that's it. And I'm not very convicted in Asana. I told you I sold. I had bought some. I'd sold some. The story to me, I mean, I gotta think this guy Dustin Moskovitz either knows something or he's just saying like, fuck it, this is my company, I'm going down with the ship. And he's buying literally at this point more than $1 billion worth of stock in the last 6 months alone.
It's crazy. It's crazy,
It's
man.
insane. And I mean, he's a rich guy, obviously, to buy $1 billion of stock. But his net worth, I think when I looked at it, which I don't know how accurate it was, said it was about $8 billion. 1/8 of your net worth is nothing to sneeze at, right? I mean, if you had, I don't have 1/8 of my net worth in anything. Well, actually, the stock market, I do, but not one particular name.
Yeah.
Also, 1/8 of my net worth is.
For those looking for an update, Luke Jacoby has stepped away from my desk. So thank goodness he didn't. I don't think he tweeted from me, which is nice.
You were checking to make sure.
I was checking. He didn't say anything embarrassing. Oh, you want to hear something funny?
Of course.
My dad texted me on Friday. So we had Jay Woods on the show, right? Or was that Thursday?
Yeah, remind me who
Right.
Jay Woods is.
The Drive Wealth, Florida director of New York Stock Exchange.
Okay.
Whatever. I think he was on the show Thursday or Friday. And I guess one of my dad's former coworkers works with Jay and liked Jay's post on LinkedIn, and I was on the thumbnail. And so this coworker of Jay, who's a former coworker of my dad's, and they're connected on LinkedIn, saw they posted about the show, and my face was on the thumbnail. So my dad saw my face on his former coworker's LinkedIn page, which he thought was very strange. I guess that means I'm famous now. Into
the wild. So I had my boss at like my old job in college sent me a TikTok that I had posted from Benzinga's TikTok and was like, oh, this popped up in my For You page today.
That's funny.
And I thought like, oh my God, it's crazy. Like I'm getting, our TikToks are getting recognized in the wild, whatever. Found out that TikTok will show you videos if someone that is in your contacts posts a video. And since my phone number is connected to Benzinga's TikTok, it's more likely that it just popped up on his page because he has my phone number saved in his phone.
Got it.
Which I guess there's no way to know one way or the other which
All right.
one was.
I want to address a DM that I got during the show just today from Henry. He's asking about AppHarvest, APPH. I'm going to bring the chart up on this.
DM from Henry, R. Henry?
No. Henry K? No.
Oh, I thought you were talking about Henry K.
No, different K.
Oh, yeah, DM like on Twitter. Not on
Yeah.
Slack.
No. A Twitter DM. Henry from
This
Twitter.
was a Young Investor stock. Shout out Young Investor.
Henry from Twitter is asking me about AppHarvest. Okay. I'm just going to read Henry's comment. Wondering if you could provide some insight, in your opinion, the recent move in APPH. How much of it is due to what's going on in Ukraine? It is a former SPAC, but it is producing, expanding, and meeting its objectives. My thesis has been unfairly punished by association. So he owns the stock and wants my thoughts. So first thing, yes, it is being punished in part because it's a SPAC. All SPACs are being
hold on,
punished.
real quick, Spencer. Let's say what AppHarvest does. So what AppHarvest does
It's
is
ag tech, right?
they provide climate-controlled agriculture. So essentially think like a big dome where you can grow tropical bananas in the middle of Kentucky in the winter.
Right.
Or Michigan in the winter.
Or Michigan.
What did I say?
That works too. So are they being punished in part because they were a SPAC? Probably. All SPACs are being punished. Is it fair? No. Are there some great companies that went SPAC? Yeah. Yeah. I think it's unfair to say that of the literally hundreds of companies to go public via SPAC in the last 2 years that they are all crap.
I'm not saying that.
They're not all crap.
How many great companies have went public via SPAC? Like I'm thinking about it. Like the ones that have held up the most: Laser, DraftKings.
DraftKings is getting punished now too.
Lucid. I don't know if I would consider any of those three companies great companies. Maybe
in the long term, there will be a couple winners. That's just the law of averages, right? There will be a couple winners. There will be a couple big losers, and maybe most of them are going to be down. But you will have a couple winners. That's just like a standard distribution, right? The bell curve, right? You're going to have a couple winners. Now, so that's the first thing that it doesn't have going for it. The second thing that it does not have going for it, and I looked this up very quickly in Benzinga Pro. I just went to news, and this is a news feed of every single headline we've ever had on AppHarvest. They missed their numbers, okay? Now, I'm not talking about the last quarter. I'm talking about the going before that, okay? They raised their guidance last time around, but before that, they missed their numbers in August And they missed their numbers once before that as well. Yeah, they lowered their guidance in May. They lowered their guidance in May and in August. And so I understand that their most recent report was better, but you cannot be lowering guidance or missing your guidance in this environment. You can't. That's what that big gap was. That was them lowering guidance. You cannot be doing that. So yes, they appear to have had one good quarter. Does that mean the stock should go back to 20? How high did it get? You got to 40. You got to, what's the all-time high? 42. Okay, so great. They seem to have had a good quarter where they raised their guidance. I mean, they missed their sales, but they missed their earnings, but who cares about that? Their sales came in above estimates. Again, that's their EBITDA guide for the year. Looks like it's okay. It's okay growth, right? Fine. Now they need to do that for like 8 more quarters, right? It's not the environment. This is not the environment for moonshots. When I say moonshot, I mean like high growth, long-term stories, companies that will take years for the story to play out. This is a growth story. We are not in a growth environment. So maybe you're still going to end up being right one day. But investing is hard. This is why it's hard. Because you got to stomach periods like this where I'm sure you know more about the business than I do, okay? Maybe you're right. But how long will it take to prove that out? The bottom line is the margin for error here is basically zero from an AppHarvest standpoint. The margin for error is zero. If they come out at any point in the next couple of years and either lower their guidance or say our growth rate is slowing or anything negative, that's all the excuse the market needs to punish you even further. So is there a macro tailwind here with commodity prices rising? I'm not quite sure how that impacts their business because they're not really a commodities business per se, right? It's like a farming tech business. I mean, the market seems to think that it's good for AppHarvest. So that's cool. You've got that going for it. That's probably a temporary thing, right? I mean, I'm hoping, right? I'm hoping we don't have $5 oil for the next few years or wheat through the roof for the next whatever. But margin for error here is zero. If you're going to hold this thing, you're just going to have to put your faith that management knows what they're doing and that they can grow consistently quarter over quarter and year over year. That's the bottom line. Sometime, and look, it may not come back. Okay, it may not come back. In hindsight, was all this price action stupid? Yeah. I mean, $40 for a company with an EBITDA of what, $50 million a quarter? Come on. I mean, this it may not come back. It may also just come back. It may take a while. This is the challenge of investing is trying to understand when you're right versus when you're just early. And unfortunately, no one else can tell you when to sell. Only you can tell yourself when to sell, right? Only you know how much pain you can really take. Now, you were at an all-time low prior to the Russia invasion of Ukraine. So you've had a nice couple of weeks there. You've gone from the stock has doubled in 2 weeks. That doesn't make you feel very good, I'm sure, if you bought this thing at 20 or 30 or 40. I don't know when you bought this thing. But this is not the environment we're in. We're not in, because it's not just AppHarvest, it's all of them. So is it being unfairly punished by association? Maybe, but call it what it is. It's a growth stock. It's ag tech. Tech being the key word there. Okay? Zero margin for error. That's the bottom line. You may just have to just wait this thing out or just write it off, honestly. Those are your options. Or sell calls against it. I don't know. Yeah, maybe that's what you do. Just sell call. I have no idea what the options premium looks like on this thing. But yeah, I mean, I feel for you because this looks bad. It is bad, and I've got some stuff too that's been pretty brutal. I've got some stuff that's. I mean, I got SoFi, which is an all-time low still. It was on Friday, or not Friday, the 24th. That's what I meant. Yeah, this is brutal. This sucks. It sucks to be in a stock and be down. In my case, I'm down more than 50%. My cost base is like 2040 or something, 2050.
What? Yeah.
Right, and I'm down below $10 now. I've lost more than half my money on SoFi.
This is why a week ago or two we were talking about averaging down, and there's sometimes it makes sense to do it, and there's sometimes it doesn't.
So
I would
hard,
say
though.
it makes sense to do it on a position where you're, very, very, very almost certain. Like I average down in SPY because I know no matter what, SPY's coming back, right? If SPY, I mean.
Well, or we're screwed.
Or we're screwed.
Yeah.
Or we're screwed. Yeah, of course. I don't know if AppHarvest is coming back. So I don't know if I'm averaging down if this is me and AppHarvest. I actually do think the company's really cool. I think the idea is really cool. My worry about it is agriculture, just like everything else in the U.S., it seems like. The big have been getting bigger and the smaller so if it ends up being true that like climate controlled farming is lucrative, it makes sense from a business standpoint, there are going to be other people that do it. It's not like AppHarvest has this whole idea of putting growing crops in a dome under patent, so I don't even know who the biggest farms are in the country or
Cargill would be one,
the biggest,
and
just ag stocks in general.
Cargill, and what's the other one, guys?
Driscoll's. That's where I buy my strawberries from.
No, what's the starts with an M, right?
I don't know.
Whatever. Cargill's one is the big one.
What's do you follow this Yates investing guy on Twitter?
Yes, I think I do.
He just tweeted the fact that the U.S. isn't even thinking about drilling oil in the U.S. is mind blowing. And I'm like, what are you talking about? We drill more oil in the U.S. than like anywhere.
I don't know.
We're at peak. We're almost at peak capacity of oil production. Like we've been ramping it up over the past year. I don't know where people. He's getting kind of grilled in the comments.
Is he getting ratioed, as the kids say?
No, he hasn't gotten ratioed. In fact, most people agree with him, but there are people that are pointing out his.
I am definitely not an expert on the oil market, so I will not comment.
They were just talking. I was listening to it on.
Del Monte's public, Dylan.
Or they were talking about it on what's the NPR like daily econ show? Market update. Marketplace.
Sure.
They were talking about oil on Marketplace.
Oh, it's not Del Monte. What's the public one? What's the other? Dole. Where is Dole's public? Yeah, DOLE.
That's what I was thinking of.
Oops. Yeah. So again, the takeaway in the AppHarvest conversation was know the difference between a trade and an investment. And if it really is an investment, if you're honest with yourself, you gotta be honest with yourself though. If it's really an investment, then treat it as an investment and don't look at it every day or every week or every month. Okay? I don't look at SoFi every day. I don't. I look at it when someone else brings it up. Okay? That's the truth. What separates Warren Buffett from everyone else, and what makes him the best investor of all time, is his tolerance for pain is legendary. The guy can take more pain than anyone else. Sometimes that's what it takes. Okay?
Yeah, he does more research on his companies that he invests in than I do, though. So I'm sure when he does have that pain, he knows deep down.
I gotta say, I just don't agree with this comment. If you have an investment, a serious long-term investment, and you've done the research, and you think it's sound, don't. I'm not saying never check it. You should check it, but don't check it every day or every week or even every month. If it's a long-term thing, treat it like a long-term thing. You think I check I got VOO, right? You think I check my VOO every other day? No. I don't even know where I bought it from because I'm always buying. I don't even know my cost basis. I have no idea. Because I don't care. I don't check Disney. I own that stock. It's a long-term thing. I don't check Disney unless somebody brings it up. I have no idea where Disney's at right now. No idea. I'm gonna guess like 120. What is it? Is it 120? I'm just gonna guess. I have no clue. Oh, it's at 134. I was pretty close. All right. So treat the long terms as the long term stuff. Treat the short term stuff as the short term stuff. Know the difference. That's half the battle. But be honest with yourself, though. How much pain can you take? I don't know the answer. Like SoFi, I can take more pain on this. Now, will I have to start assessing, like seriously asking questions of myself? If we get down to like $5, maybe, right? Because now we're talking losing 3/4. I mean, that's bad, right? That's bad. That's why, first of all, that's why sizing is everything. My SoFi position is like started off as like 2% of my account, right? So at most, I'm losing 2% of my account. It's not going to kill me. Yeah, sizing is everything.
I guess.
So now it's like 1% of my account.
I guess when I brought up the oil, people are arguing about it in the chat. I'm looking at the stats right now. A year ago, so March 2021, we had 544 active rigs.
Okay.
That includes on land, offshore. We had 389 on land alone. Currently, we have 635 on land alone, 867 total, including offshore and Canadian rigs. So we're up. We're up in the U.S. from 403 to 650, so 247 more oil rigs active now than were a year ago. So I don't know how someone could say that we have limited or slowed down production of oil.
Well, the rig count is one thing, but how is the
barrels per day is up too? Actual production.
Okay.
Yeah. I don't know. I'm just saying, like, I don't want to get in any political arguments. I'm just saying saying that we have slowed down oil production in the last year is just completely 100% false.
I know we're a long ways away, but I am just watching Bed Bath & Beyond to see if we end up going red. We're a long ways away from that. We'd have to fall down to $16 for Bed Bath to go red. That would be dramatic. But hey, what's the midpoint here? 16, and the high was 30. What was the high? 32? 30. Wait, come on. I can't see. What was the high? 33. So what's the midpoint there? 20. What's that? Math is hard. 24 ish. Right? We've fallen more than 50% from the high of the day to the close on Friday. Whew. Tough. It's tough out there. All right. It's 1 o'clock on a Monday. You know what that means? It's time for Trend Spider. Let's bring Jake Wojastik on the show. Let him show us what he's watching. And y'all have any questions, any setups for Jake? He's a pure technician, much better at it than we are. So drop your tickers for him in the chat. Let's do it. Jake, how are we doing, man? I heard you guys got some snow over the weekend.
Yeah, we did. Things were going good. Got more snow than they were anticipating. And I was actually thinking about this yesterday. Every time they say we're not going to get much snow, we get a lot more. It reminds me a lot about the markets when everyone's saying one thing's going to happen and then completely the other thing happens. So,
fair.
Yeah. It's March in Denver though, so the snow melts within a day or two. It was nice and cloudy and snowy yesterday, so it kind of felt like winter. But with Denver, you'll be back in the 60s or 70s in a week. So
yeah, it was 60s here yesterday, but I think we're gonna get your snow now, like tomorrow, which should be a lot of fun. But let's bring the charts up on the screen. Kind of a wild day out there, Jake. A tale of multiple different markets. What are you seeing? This is the SPY. Walk us through these areas and what levels you're watching.
Yeah, so with the S&P 500, we're looking at SPY, which is the ETF. We're in this just kind of very just classic channel here. So prices have been hitting lower lows as well as lower highs, shown by this green line with the lower lows and then the red line with the lower highs. And so far today, The main thing that was kind of a red flag was the fact that the volume weighted average price from this last time we tested the channel resistance, support zone, we broke through that and pretty much waterfalled straight down from there. And the thing is, this is a very news-driven market right now. I mean, you do have news driving a lot of things, and sometimes it's hard to kind of figure out what's really moving the market. And that's something generally you just have to deal with, with oil, some of the things that are more global. But with the S&P 500, sometimes you're like, what is actually moving the market today? And so that's been kind of a tough thing to kind of deal with. One thing you can use, we do have the news widget by Benzinga. So if you do want to look at most recent news on anything that you're looking at, just go to the widget, click on news here, and all the most recent news will come up. So if you're kind of trying to wonder what is driving the market, why did we get this random pop over the last 10 minutes? There could be some things in the news that are driving the market. And not like news never drives the market, but this is definitely a more sensitive time for that. You've got oil prices just going crazy. So for now, with any instance in the market, you just have to follow some of these patterns and these setups. So right now, we are stuck just in the middle of this channel. It's really hard to pick a direction at this point. Some people, if you're just playing horizontal levels, you'd probably continue to be short below this horizontal level around 427.50. If we do continue down, that's a long ways down to the bottom of this channel, which is right around 400, give or take. One thing I will mention, anytime you're in a diagonal zone or line, that line is a function of time. So that line is moving as time goes by. So let's say the market absolutely just tanks today, which you'd probably hit a limit down if this happened. But if we went straight down today, your support zone would be around 400 to 402. Now, if this thing took a week or two to move down, then all of a sudden your support zone is way down here in the 390s. So these levels are a function of time, and you just have to kind of see how price is evolving rather than just saying, oh yeah, there's support down at 403 because that's right below the current day. If these things take time, those levels will change with time. So yeah, with the S&P 500, you got a lot of empty space below. So that's definitely a little bit of a red flag. And then just in general, I mean, these individual names are just getting absolutely destroyed. But if we were to look at, the Qs are also getting hit pretty hard. There definitely was a little bit of a red flag last week when we did close below this support zone. So you can see here, you've got this green zone. And what I did was I actually was measuring what is the volume weighted average price of this support of this trend since this trend zone started. So what I did was I just measured the VWAP, so this blue line from the start of this trend zone, and you can see not only did we break down through the trend zone last week, but now we're breaking down through the actual trend VWAP. So all in all, definitely not an incredibly strong look. If you were to look at an area below, the most logical one would be just this previous low that we saw a couple weeks ago, and that's right around 318.25 or so. And really, you just kind of have to follow the trend at this point. The markets are trending lower for sure. You just have a lot of chop and a lot of news kind of throwing people off, I think, a lot of the time. One thing that I will say is really interesting here. So your main indices, your S&P 500, the Qs, IWM, all down. But if you go and look at XBI, XBI is actually somehow kind of holding and is actually green for the day. And XBI
this is the biotech?
Biotech, yeah. And biotech is one that can definitely be looked at as a risk on, risk off type of indicator. However, that can change very quickly. The one thing that I'll point out here is if we do, this is the weekly chart, if we do break down through this longer term trend zone, things could get pretty ugly and we could be retesting the COVID lows. And that's something that you're seeing a lot of the same on a lot of these charts. The COVID lows are going to be your next really important level below. For XBI, that'd be in the low 60s. But for now, it is interesting to see this discrepancy between XBI and some of these other big broad market indices having a little bit of a discrepancy there. And then you did have Bitcoin green, at least for a little bit today, and then the market switched. So just because XBI is green right this second doesn't necessarily mean, we're going to have a big week. It's just that there is definitely a little bit of a disconnect between XBI, which can be looked at as more of a risk on type of index or index.
So, Jake, how much of what's going? I mean, everything going on right now. I mean, you're on FinTwit, like I am, like we are here. When I open my Twitter now, it's like every other tweet, someone's like, "This is about to get way worse. Global recession's about to hit." Whatever. I mean, to me, like I see all that, and it almost makes me bullish. Like seeing how like everyone, is so bearish. Do you feel the same way, or do you feel like these people have a point that things could and will get worse? I mean, where's just your overall sentiment kind of standing right now? Or are you just waiting and watching the charts?
Yeah, it's really hard to say. I mean, if you're just looking at, the weekly and the monthly on some of these charts, it's really hard to be incredibly bullish. However, you do have something on Transpire that can help you at least get an idea of seasonal cycles in some of these names. So for example, you had the monthly candles close last week. So if you look at seasonality, what's really interesting is if you're looking back, and seasonality can be used a lot like, anchored VWAP, right? You want to measure the volume weighted average price from a specific point in time, whether that's a capitulation event like the COVID lows, whether that's all-time highs. You want to measure it from when the status quo kind of changed in the market. And so if you are looking at seasonality on a month-by-month side of things, it's really interesting. If you look at seasonality since 2009, which is pretty much when the financial crisis ended, give or take a couple, or at least that's when we bottomed, give or take a couple months. I think March 2009 was the absolute bottom. But you'll notice something interesting. April is actually a really strong month of the year. So could this be a month to kind of buy the dip into April? I think the issue is there's so much uncertainty around what the Fed is going to do. The market is priced in all of these interest rate hikes. And I think Spencer and I had talked about this. I don't know if we were talking about 2018 or 2016, but this still reminds me a lot of 2016, where in 2015, they raised rates once in December of 2015. And then they said, we're going to raise rates like 4 more times in 2016. And everybody was anticipating a raise in March, and it didn't happen. And you've literally got that exact same thing now. People are anticipating, and that's because Powell pretty much said it's 100% guaranteed they're going to raise rates. But, the way that oil has been rising, if you raise rates in this type of environment, I mean, you're really just kind of putting the nail in the coffin for the recession. So long story short, I'm kind of waiting to see mainly what happens with Russia. And that's kind of the issue is like, if this Russia conflict gets worse, I really don't see oil prices going down anytime soon. But you are at the point where oil's getting so expensive that some of these drilling sites around the world are starting to ramp up production, which could add supply onto the market. And that's I think I saw somewhere in Africa said they were putting another drilling site online. So that is something to definitely keep in mind is once you do get to this high of a price, you've got everybody trying to just pump as much oil as possible. The problem is it's a global price. So
something that I found interesting is actually there's something like 9,000 leases open right now that aren't being used for oil rigs in the U.S. And it makes a good point. I read this article over the weekend saying, well, why aren't these companies hopping in and using these 9,000 leases to produce more oil? And basically, the person who wrote this article was asserting, well, if you were Chevron and oil prices are at all-time highs and like things are pretty good right now. You just recorded record profits. I mean, even about talking about before the pandemic, Chevron just reported better numbers in 2021 than they did in 2019. Why would you want to open new oil rigs and bring the cost down? You know?
Yep, exactly. So, I don't think there's a lot of incentive to do that, and I think at the end of the day, it's all about money, unfortunately, and these companies are just worried about their bottom line. And I think, you've definitely got incentives by the government or no incentive by the government to get into that side of things. And, some of these companies may think, well, we're living the dream now with high oil, but in 2 months when we get the rig actually online, oil may drop 20%, and then
right. And it's not as simple for the companies to say, okay, we're gonna move into this lease and start drilling oil tomorrow. It takes months to get equipment, employees, everything in place. So that is probably a big part of it. And there's a reason why these aren't being used, and investments haven't been flowing into them in the past. So I don't know. I think it's fascinating. I think at some point. Hopefully not, but if things continue trending the way they are, at some point the administration will have to get involved and say, hey, we need, you guys need to produce more. You guys need to, bring costs down somehow, because if we do, and this word's getting thrown out there right now, which it's a very scary word. I don't think it should be said lightly, but talking about stagflation, where you have inflation in a recession where basically the economy is shrinking or not growing, while inflation is rising. Yep. That's like as bad as it gets. Bottom line, we do not want that.
Yep. Yeah, and I actually said that yesterday. I mentioned, I would be shocked if they actually raise rates in this month, because exactly what you just said. Oil is already the price of oil is already going to slow down the economy big time. I mean, I don't even want to drive right now, because I don't even want to go and see I don't even know what gas prices are, because I just I don't.
Oh, you're out in Denver? I mean, you're out in Colorado. They're probably it's probably $4.30 out there.
Yeah, I think my buddy said he paid $5.29 in Boulder for premium. So it's crazy, and that's going to slow down the economy anyways, and probably lower the euphoria of people just wanting to buy everything. All of a sudden, your costs go up, and maybe you don't go buy that house that you're going to buy. And so you don't necessarily need interest rates to increase as well. You've got essentially this massive increase in people's budgets that just happen. Think about traveling and what airline tickets may look like in the next month. Sometimes there's a little bit of a lag there, but
I mean, they were already expensive. I actually flew out to Colorado over President's Day weekend, and they were expensive then. And not just, I mean, obviously going to Colorado for President's Day weekend, that's a busy weekend, but all across the board, I was looking and flights were expensive. So yeah, with the cost of oil and whatnot rising, I would expect the airline tickets to continue to rise.
Yeah, and airlines have been getting absolutely destroyed.
Look, Southwest is down 7%. Is there specific? Let me see if that's across the board.
It is. I think Delta's down 6% today.
Yeah, American Airlines down 7%.
Down 10%.
Who is?
Wow. Delta.
What is going on? I mean, do people just not want to fly in wartime?
Wow. I literally just looked at this and it's down 5%. I have no idea. I would assume that the market's pricing in a lack of demand from oil being so high. But that's 10% down on Delta. That is pretty nuts.
I mean, I wonder if this is a buying opportunity. Flying's not going anywhere. People are still gonna buy plane tickets and travel. It doesn't matter. You
got this gap right here that just filled. That's kind of the main thing that I'd be looking at, is just the fact that this gap filled. I mean, that is brutal, absolutely brutal. I mean, from a technical perspective, it was definitely an area where you just kind of had this triple top forming. In hindsight, it's easy to say, but that was an area that this failed to get through. So some people maybe didn't get faked out like you would have if you closed above, let's say 46 on Delta. This market may be one to just keep looking at, things to potentially short. The problem is though, is with the VIX so high, buying puts right now, puts are so expensive and calls are expensive. But the thing with puts is if you buy a put right now, they're incredibly overpriced because the VIX is so high, and that's across the board. VIX, the volatility index, affects options premiums, not just on the S&P 500, contrary to a lot of people's belief there. So what happens is if for some reason we absolutely explode the next couple days or whenever it happens, one, your puts are going to get killed because and it depends. If you're buying really far out of the money puts, especially, you're going to get killed. Two, with the VIX absolutely getting destroyed, that's like a double whammy on your puts, where with calls, if the market's tanking, at least your calls are becoming more expensive too because the volatility index is up. And then once the market rips, generally you'll have a big move in some of these names where sometimes that implied volatility crush from the VIX will be offset by just a big move up in price, and that will increase the IB. So with puts, it's really hard right now because the VIX is so high. Puts go both ways when the market turns. The volatility gets crushed, and like I said, it depends on how far out of the money you're at. If you're buying some crazy far out of the money put for like Friday and the market reverses, not only are you getting hit by the put going the wrong or the market going the wrong way, but you've got the implied volatility getting crushed, and that's just going to double kill your put. So puts are definitely the way to go right now, but it's one of those things where if you're not day trading them, you're really kind of putting yourself at a little bit of a risk of just waking up one morning and all of a sudden the market's up 3%. So like I was going to mention, Netflix here could be a potential one to break down. You've got a pretty classic descending triangle. Interestingly enough, you haven't broke this previous low. And actually Netflix is doing relatively well considering the market. And I don't know, maybe the market just ripped when we were talking 2 minutes ago. That's really
right
shocking at this point. But yeah, Netflix is holding pretty well. So it's kind of interesting to see some of these names, but I mean, you're pretty much at the apex of this descending triangle. And a lot of people ask me, well, what typically happens here? Well, there really, some patterns have a bias, but a lot of the time you just have to wait for the price to tell you the direction. And we talk about this a lot, I think, when I come on. If then, right? If we break down and close below this low from January 24th, then this is probably going to continue a lot lower. And you have to look pretty far left to see maybe the next areas to watch. And there's not a lot of like really horizontal levels below. I mean, the next level, the main level below is your COVID low down here in the 290s. I guess you could throw this pivot here as a potential area below if we break down, let's say around 340. But, Netflix is one that I think regardless of which direction the price breaks, you're going to have a pretty big move. And that's just an if then, right? If we break above this resistance zone, call it 375 in the next day or two. Like I said, if we just chop around for 3 more days, then that line's going to be at like 369. So over time, this price level is decreasing and decreasing. But if we wanted to break through it today, we'd really need to get like above 378 and close above it. So this one would possibly be on your list of companies that is going to have a big move, and you just kind of have to put your put your levels in, and the price will dictate that direction. Now, one thing that's interesting is when oil gets this high, you do have some names on the sustainable energy side of things actually doing okay. BLNK is one that actually still has higher lows from the January low, and you actually have a decent day here today. So this is like an EV charging station. So any alternative energy stocks are likely going to probably do better than some other names, because all of a sudden what used to be a really expensive alternative with oils this high, all of a sudden EVs and EV charging stations become, kind of economical. So BLNK is one. First Solar is another one. This one's doing relatively well. I mean, it's up 6% today compared to a lot of the other names out there that are just getting crushed. And obviously, you've got your oil names that are continuing to trend here. I mean, ExxonMobil just continues to hit new highs. SLB is another one that is having a really strong day today. So yeah, I mean, you got to look at what's trending for sure. But keep in mind, when oil becomes this elevated, you do actually have sometimes these green energy companies do pretty well because all of a sudden they can compete with, even though they're technically more expensive and a more expensive alternative, when oil becomes this expensive, sometimes they're not. So solar, EV charging stations. I think NEO was up decent today for a little bit. I don't know what it's at now.
Yeah, I mean, Tesla was up today, and then it went red, and it actually has dumped off kind of in the last, 10, 15 minutes as we've been talking. But, I mean, I would agree. You would think the trend with high gas price, I mean, how many times, are you going to pass the gas pump at $4 before you say, screw this, I'm getting an electric car?
Yeah, exactly. And I think the problem, though, is, and somebody mentioned this in a comment on Kathy Wood's post. Oh man, I feel bad for her. Honestly, she's had some interesting calls in the last several months.
I mean, part of making really bold claims is you subject yourself to criticism and ridicule when those bold claims.
Yeah, and one of the arguments, fair arguments, is sure, oil's really expensive right now, but what about all the metals that go into making an electric vehicle and making these batteries and all that? Those prices are still going up just with oil. So that's definitely an argument that I thought was pretty clever on one of her posts. That I think it was Shy Girl, who's incredibly good at what she does.
Oh yeah, we've had her on the show.
Yeah.
She does a lot of dark pool stuff.
I don't think so.
No.
She's very much on oil. Like her oil is like her thing, and she's really.
I gotta reach back out to her because we've had her on the show before. I was thinking of someone else that does the dark pool stuff, but yeah, we've had Shy Girl on. She's great.
Yeah, so she had mentioned that in the post. She was like, "Well, you look at all the metals that go into making an electric vehicle; those aren't dropping." So
I mean, I wonder. Yeah, like if Tesla's cost of production for a car goes up a certain amount, if they can pass that off to the customer or if they're stuck eating it. Because I'd imagine, I mean, with inflation and everything, say a Model Y or whatever is $80,000. I'd imagine they'd get away with, okay, 85, 90, sure. But then you get to a point where you start pricing out customers.
Yeah.
And if materials, like you're explaining, keeps rising, maybe there's a point where it's not even profitable to make a car and sell it for what they're able to sell it for.
Yeah, and that's where...
I mean, we're probably still a ways away from
it. That's where stagflation comes in. You've got all these prices rising. The economy is definitely not growing enough and willing to absorb these types of price increases within a month. I mean, prices have been going up pretty much nonstop. But especially, I mean, the sticker shock when I go to the gas station finally, because like I said, I don't drive that much. I work from home. Generally, since we have a baby, we don't have to go very far because 30 minutes in a car with a baby is a long time for them. So we don't really use too much gas. And so when I go and fill this thing up for the first time in 2 weeks or whatever it is, I'm going to be definitely in sticker shock. And what
I'm back.
Hey, Jake, we're back.
I don't know what happened.
I don't know.
We had a glitch in the matrix there.
Oh wow, maybe somebody wasn't happy with what we were talking about.
That was scary, man. We just lost everything for a
Oh
minute.
yeah, that was definitely a KGB cyber attack.
Okay, I was wondering if it was just me, but I guess it was everyone.
No, not just you.
Okay. Yeah.
Proton, we don't say the name of the site we use to stream, right?
Yeah. So what I was saying is, we're getting to a point where stagflation is almost a guarantee. You've got high prices. And a lot of people are arguing, well, these high prices are for monetary policy. Yeah, over the last 2 years, since COVID, definitely it has not helped pumping a ton of money in. But I mean, go try to get some chicken wings at a restaurant. What are they going to tell you? There's a supply shortage of chicken wings. It's not, sorry guys, the Fed has been pumping so much money, our chicken wing prices are going up. I mean, people are literally mentioning their supply side issues, their shortages, and that's definitely and that's something I actually kind of agree with Kathy Wood about. She's mentioned this as well. It's maybe more supply chain than just printing money. Printing money doesn't help. I mean, go look at real estate, go look at the stock market. That definitely created these bubbles, but pricing of goods, I think, definitely is partially due to some of these supply chain issues, and they're clearly not going away with these geopolitical issues. So we'll see what happens, but all in all, it's really hard for me to be too bullish right now. And just based on what you're seeing in the news, it just doesn't look like there's a quick resolution to what's going on. I think Putin is absolutely crazy, and I think he just I don't think he's lost his mind. I think he knows exactly what he's doing. He's just playing chess, with this whole situation. And
which Russia does have a pretty long and strong history of coveted chess players.
Yeah. He's definitely playing chess. I mean, he knew exactly what he knew, that Europe was completely dependent on their oil. What a time to do this when you've got a lot of leverage. So, the guy's definitely not stupid. He's a horrible, evil person, but he's definitely not stupid. He knows exactly what he's doing. That's why I don't think this is going to be a quick resolve of, okay, let's go meet, and unless the Ukrainian president just says, okay, we'll give up everything, whatever, maybe, but I don't think that's going to happen either. So just a weird time. A lot of charts pretty much broken right now, but we'll see what happens in the next couple days for the weekly candle and go from there.
All right. Well, Jake, we appreciate you coming on. As always, if you guys want more from Jake, you can find him on Twitter. Jake, remind us the handle, because I know we changed it in the past couple months.
Yep. So it's if you want to follow TrendSpider's accounts at TrendSpider, mine is at Jake ___ Wajastic, WUJASTYK. So Jake __ Wajastic. And I post a lot of things, and a lot of these charts I'm not always trading. It's more or less trying to provide charts for people to check out and get a new perspective. I mean, I post a lot of charts. It would be very inefficient for me to try to post all them, but hopefully they're helpful. And I try to be completely neutral in everything I post.
And if you want 25% off TrendSpider, go to trendspider.com. Use the code BZ25. 25% off. Jake, always a pleasure, man. Thanks for coming on.
See you guys.
All right, and just like that,
Man, look at the chip stock. I heard you talking about the chip stocks earlier. Just keep getting wrecked.
Yeah.
Ralph Lauren down.
Dude, freaking PVH. Oh my God.
What is PVH?
It's a retailer. We're gonna bring on Chris Dupree right now, but before we
before we bring on Chris, I had something else real quick.
Holy cow, PVH getting.
What is PVH?
It's a freaking mall retailer. I don't know.
Like it's like a store. Like you can walk into a PVH, and I've just never heard of it.
They own what do they own?
Oh, okay.
Philip Van Heusen. Yeah, they own Izod,
Okay.
Tommy Hilfiger, Calvin Klein.
Okay.
Yeah, it's Philip Van Heusen. That's what PVH stands for. Philip Van Heusen.
Thank you.
Okay, you're welcome.
What was the what's the other or not the other, but the luxury? It's like LM or LVMH.
Well, that's
Louis Vuitton.
That's Louis Vuitton. That's
Louis Vuitton.
it's
Hennessy.
That's a different category. Really, this is more of like because that's luxury goods. This is not luxury goods.
No,
This is
I
just
know.
luxury,
I know. It just reminded me of that, and that whatever that what Louis Vuitton announced, they were shutting down a lot of Russia stores, I believe.
Oh my God.
But what I was gonna say real quick before Chris hopped on, so I have been So if you have a brokerage account with less than $25,000 and it is not a cash account, meaning that you are using margin, you only have a certain amount of day trades you can make in a week, or I think it's 4 day trades in 5 trading days. I hit my 4th today on Robinhood because my buddy Brett Simba is doing a small account challenge this week, and I was like, oh, it'd be fun. I'm just gonna play along with him. And I texted him and I'm like, yo, how can I play along with this? Not play along. How can I follow along in this challenge if you're doing a lot of day trades and I don't have 25,000 in my account and it's specifically a small account challenge? And he's like, dude, I've told you for months to just get off Robinhood and make a cash account somewhere else. So I was like, all right, you're right. That was stupid for me to ask because he had told me that. So I finally decided today, and I just closed all my positions. But then I bought the Lockheed Martin put, and I mentioned that I couldn't sell it.
You can't quit.
But I just tried to because I wanted to see what would happen, and it let me sell it. So I don't know if Robinhood's just glitching or they just screwed up, but the whole point was that I hit my 4 day trades. I was not supposed to be allowed to buy a stock and sell it in the same day, but I just did.
Dude, don't ask me.
I'm not asking you. I think it's weird. I don't know.
I can't explain that.
I can't.
I don't know.
I'm gonna try it again though and see what happens.
Oh man! All right, it's time to bring on Chris Capri. If you don't know who Chris Capri is, if you're not in the Benzinga options trading school, frankly, I should be there. The problem is I want to be in that, but I also do my job, and I can't do both at the same time. It's difficult. Maybe Chris can tell me how I can do both at the same time. But Chris Capri runs the Benzinga Options Trading School. We're gonna put the link up in the chat and on screen right now. But he joins us every single Monday, and let's get him on the show. Chris Capri, what's up, man? How we doing?
What's going on?
How was your weekend?
You can be in by watching the recordings.
I know that's
all the live sessions, and
that's what I should do. I should just watch the recordings
time during your weekends. And
wait, they're all saying my account is dead tomorrow.
I don't know.
Aaron, I don't know if Chris knows either.
I don't know.
I'm gonna go try to figure this out. I'll let the adults be.
Oh gosh. All right, Chris, what's up, man? How's your weekend?
Good. Yours?
It was okay. It's okay. A little bit hard to, sometimes hard to keep the mood up when I just see depressing stuff happening over in Ukraine. But
there's this. I've had to trade through a lot of events like this, believe it or not. One of my first major events on the desk when I was a broker at FXCM was the London terrorist bombings. It's an incredibly sad situation. There's no doubt about it. But we also have a job as traders, which is to manage the risk, manage portfolio, and make sure we're positioning ourselves for opportunities. And so in terms of things, from my experience, things that are outside of your control, it doesn't do a whole lot of good to get too upset about it or to let it kind of control or drive your mood, because you can't control it. And if you let things that are outside of your control kind of dominate your mood, then you are controlled by exterior events.
Yeah, that's true.
If you maintain your own inner sense of balance, you can still feel empathy for the situation and sadness, at the loss of life. And, after thousands of years, we still choose violence instead of diplomatic solutions or something like that. We can feel sad about that for sure. And that's something that's, can be turned into being an appreciation for the things that we do have that are good. But at the same time, we can't let everything in the world that's bad or sad
You're totally right.
Because
You're totally right, man.
Run over by it.
Things
that are outside your control.
Yeah, you'll never live your life. You'll never live your life. There's always going to be something.
Yes, always. I've gone through a lot of these trading events, and you can't let them control you. You have to take it, digest it, and then move on. And so you be sad for it. You can donate if you want to and things like that. But focus on the things that are within your control, and that is much easier for you to work with than the things that are outside of your control. Okay,
so you've traded through a lot of crap. I want to ask you, because we've got a war, we have a rate hike, and we are coming out of still dealing with the effects of a pandemic. Is this time different? Dun dun dun.
Yes and no. And so there's a lot of variables in here that kind of are presenting themselves as if, hey, this has a lot of the precursors to a potential bear market. You look at, it's not just meme stocks. There's a lot of stocks that are good companies that are down 60, 70, 89%.
I know, it's pretty
They're
wild.
52-week highs. That's generally not what you would consider strong breadth by any means. It's inherent weakness. And that's just before we've even raised rates. So, this is kind of a interesting kind of combination of pieces that are all kind of causing, problems. You have rates, you have Russia, the pandemic. The main issues with the pandemic now are mostly supply chain issues. There are social issues for sure, but supply chain issues. But some stocks will do well in that environment, some stocks won't. And so the Russian rates thing, now that is constantly dragging on the market. And from an options positioning perspective, what we're seeing is that traders are just not, they're keeping their long puts. And remember, long puts are a negative delta trade. So when you're long puts and it's a negative delta, that pulls liquidity out of the market. And if you think about it like this, it's very simple. So you have traders, you have dealers, and then there are initial delta hedges.
Is there some sort of a visual aid here?
Yes. I didn't share it.
Okay.
I was good on that for a week.
That's okay. That's okay.
Okay, so let's see here. Take a look at that. You should see this. Let me know when you got it.
Yeah, we good to go.
So if we look at it like this, let's delete this here and let's move this over. It's very straightforward. So you have traders position, dealers position, and then delta hedging, right?
Okay.
So if traders are long puts, we put this for a plus P. The dealers are short puts. They're on the other side of that transaction, so they're short puts. Now, dealers don't want directional exposure. They just want to get their spreads, and they want to neutralize all their positions. So what are they going to do? Well, a short put has risk to the downside. So how do they delta hedge that risk to the downside? They short shares. Okay? And as long as this is in the market, as long as traders are holding their long puts, dealers will stay short puts. They have to stay short shares to hedge those short put positions. Now, that's problematic in a couple ways. One, it means that when the market sells off, the short shares actually start pulling liquidity out of the market. And you don't want to pull liquidity out of the market when the market's selling off. That exacerbates the downside. Plus, it also forces the market to be in a negative gamma environment. So if like you or I have a long call at 50 delta, and we have a short call on a stock at 25 delta, even though we have one long call and one short call, we're still long 25 deltas. We have a net long position. When you summate all the puts and calls together, that creates an environment of positive or negative gamma. Positive, we're either long options or we're short options. And so we are in this environment where 2 out of every 3 options is a put. And so that means we're in this negative gamma environment that's continuing to dominate. So as long as that remains, we are going to continue to see this environment that's going to be marred by volatility. The puts are still going to be in control, and traders are going to keep holding puts until they feel like this situation is resolved. If you have a long or portfolio or mostly long portfolio, and you've been in this for a long time and you've seen markets like this, you're keeping downside insurance because the Fed may increase rates more than ever. The geopolitical situations in Russia may exacerbate. There's a lot of bugaboos out there that would say, you know what, now is a good time to have insurance. Just like if it's a really dry winter, you need extra protection for fire insurance, say in California, because the chance of fire increases.
Right.
So protection costs go up. We have a high VIX right now, and traders are just not closing their puts. What open interest changers suggest they rolled their puts further out. That's not what you want. You don't want traders rolling puts further out and at lower strikes because that adds to the bearish pull to the market. If we see calls going up and we see puts going up, the market tends to ladder itself up. But if you see calls coming down, which is what we're seeing, and we see puts come down, then it tends to ladder the market down because you're pulling the liquidity and everything down with it. And that's what we're seeing right now in SPYs. So, last week, this was mostly a VIX rally. VIX sold off, which creates an implied volatility crush, which creates what we call a Vanna rally. But these only last 2-3 days on average, maybe one day. And so we had everybody thinking, oh, the bottom's in, the market's going to start ripping. No, we're still in negative gamma. That's why we couldn't get past this because there isn't much call interest beyond 440. Above 440, calls dominate, but only to a small amount. But below 440, puts dominate and there's a larger amount of puts. So that means that the markets will have a bias to the downside. We did cover this in our weekly newsletter for Benzinga Option School members. We do a weekly newsletter. We also do pre-market commentary Monday through Thursday. And so we covered this in our weekly newsletter. But yeah, that's kind of what's going on right now. So markets are going to maintain fragility, and I don't see traders unwinding that protection until we get a little more clarity on rates. If the geopolitical situation kind of stays where it is, then I feel like traders kind of know how to deal with that. But there's still the unclarity of rates coming in. And as long as that's there, and that's on the 16th,
I was going to say,
you know, the buildup in positions is on the 18th. That's what the biggest expiry rate now in SPYs and Qs is the 18th. So
and that's not a coincidence. First off, the 16th is right, as you said. We're going to get clarity on the rate policy, and it's not so much a question of will they raise rates. They're going to raise rates probably a quarter point. Anything more than that would be a huge shock. But it's a question of what do they say going forward, right? How high are they going to go? And then it's not a coincidence though that the Friday after the 18th is your largest. Coalescence, your largest options expiration, because that's people. But I guess, Chris, wouldn't it also make sense that this Friday would be an especially big one, as it kind of is your last chance to get any for the weeklies? But I don't know.
You may see some positions be built, but it's not going to change the overall structuring of the positioning. Traders have been holding insurance for quite a while now. You know, a lot of these positions have been held for quite a while. And you just saw some of them rolled forward a little bit, but it's still overall 2 out of every 3 options on SPYs right now is a puts. Like prior to today, I haven't looked at today's, but prior to today, SPYs had 5.9 million puts and 5.9 million calls and 12 million puts.
Oh my gosh.
It's over 2 out of every 3. Now, right now, only 10 to 15% of SPY options are expiring on the 18th. And that's due to some of them buying protection further out, which means that traders are thinking, maybe we get clarity on rates, but the Russia situation is going to cause further problems. So, yeah.
So wait, what you're outlining here, Chris? Like I forget the word you used, but it's kind of like a stair step downward, right? Where bearish bets sort of beget more bearish bets because then the dealers have to hedge the other sides of the trade that they've taken with the people taking bearish bets. But like, what happens? Then like explain to us the mechanics as to how that flips. Like let's just say some event happens and the war ends tomorrow, or the Fed says whatever they're going to say and the market likes that, whatever it is, and so the thing just flips. Like what happens though? What has to happen to make that stair step dynamic down flip on its head?
Okay, so let's just think about this here. So
yeah,
T is the trader, dealer is the dealer, and this is the delta hedging that the dealer has to do. Okay,
right.
So if the trader is long puts and they're holding long puts, the dealer is short puts. That means the delta hedge, they're going to short shares. How much? That'll be based upon the deltas. So if traders are buying 50 delta puts, which is actually when you're long puts have a negative delta to them, right? So they're buying 50 delta puts. The dealer is actually long 50 deltas, and they have to hedge that by the amount of shares that the delta is of the position. So let's say you, Spencer, come in and you buy 100 SPY puts, okay? You buy 100 SPY puts, okay? You're long 100 SPY puts at 50 deltas. The dealer is short those 100 SPY puts at 50 deltas as well, right? So they have a positive delta, you have a negative delta. How do they offset this? Because the risk is to the downside. How do they offset the market selling off? Because if the market sells off, those puts are going to lose money. They don't want to lose money. They want to hedge all their positions algorithmically so that the market goes up or down doesn't really matter. Yeah. They collect spreads on this. So they're going to be short shares. How much? 5,000. They're going to be short shares. They're going to be short 5,000 shares. One contract is 100 shares. 10 contracts is 1,000 shares. 100 contracts is 10,000 shares. At 50 deltas, it's 5,000 shares. This is actually, we have an entire lesson on all this in the Benzinga Option School. Now, let's think about this for a second. If all of a sudden the Fed it's February 16th, the Fed comes out and says, hey, we're going to raise it a quarter point or 25 basis points here. We are only considering the situations with Russia and inflation. We are only going to raise rates 3 times this year. that would be less hawkish than people expected. So let's say the market interprets that as, hey, this is less hawkish. It's not as bad as we thought. Things are workable. What are they going to start doing? They're going to unwind those short puts or those long puts, which means the dealers can unwind their position, which means that dealers unwind their short share hedges by buying shares. Buying shares provides liquidity to the market. Selling shares takes away liquidity to the market. So because you have this kind of spring loaded to the downside, the more the spring gets loaded to the downside, if the market does flip, then you're flipping a lot more positions. And that would actually create a tailwind for equities. So if the FOMC comes out and traders are still holding 2 out of every 3 options on SPYs as a put, well, then if the market flips all that, then that stuff gets flipped on its head. The hedging impacts get flipped on its head, and we'd see a rally. VIX will come down. That'll further exacerbate the rally to the upside. It's called a Vanna rally. The dealers are buying shares back. That will unwind the long puts. Those rallies, they'll only last so long. We would need traders to come in buying calls. And if real money traders come in buying shares and buying calls, then we'll get a good pop in equities. But if it comes out and they're not changing their overall open interest in flows and they want to keep protection, that will keep that pressure on the market. So does that make sense how this all works out?
It does to me. I hope it does to everyone watching as well. So wait, let's run through a couple. We've been talking about the SPY this whole time, but let's find a different market here. Let's talk whatever else is on your radar, and if anyone has any takers as well for Chris, drop them in. But what is that?
Yeah. So let's take a look at this. So XME, I've had a long in XME for quite a long time in my long-term portfolio. Been long around 42, 43. We just closed our XME. Why? When I looked at a lot of the commodity stocks that everybody's been talking about, you've seen that they've had just kind of, amazing face rips on this. I mean, this is impressive. This is steady gains, but then look at this. 1, 2, 3, 4, 5, 6. 6 days of gains, and the stock went from 48 up to 60. That's what, a 25% gain over 6-7 sessions. Many of the commodity stocks, the material stocks like XME, BTU, VALE, all of them have had similar things. But the thing is, all of them were getting a little bit overextended, and after a certain point, dealers don't have to hedge anymore to the upside, so they're not exacerbating the upside anymore. And so we've gotten to a place in a lot of these stocks where dealers are fully hedged. They don't need to buy any more shares to hedge these long call position type things. And so now that that's kind of, they've all gotten overextended, you're seeing today a lot of them have sold off pretty aggressively. XME down, BTU down quite heavily. You look at VALE has been holding, but it's definitely pulling back. And so you're seeing a lot of these commodity stocks, DBC, also pulling back. So a lot of them are looking overextended. It's definitely not a question of the share volume, because share volume has been strong. Some of them even going up into this. So the share volume's there. So them pulling back has nothing to do with share volume. Traders are buying in shares. It's just that there's hedging impacts, and the option flows are like, you're a little overextended. We really can't. There's not much more fuel to the upside because we've kind of maxed out, topped out a little bit here. So I suspect a fair amount of these are going to start pulling back soon this week. And then I think that'd be healthy. I think many of these pulling back would be healthy, because then when we reset the options board a little bit, if you have long calls here, most likely these are 1 delta calls at this point. And 1 delta calls are incredibly sensitive to price, because remember, they're moving at a 1-to-1 relationship with the stock. So if the stock moves up $1, your option goes up $1 in premium. But if it goes down $1, it goes down $1 in premium, which makes it much more sensitive to pullbacks. And so you start to get these pullbacks if they're strong enough. If you had a long call that was a 1 delta, at 55, maybe it was $5 in premium, $6 in premium, $7 in premium, $8, $9 in premium, and all of a sudden it's down $3 in premium in one day, you might be like, hey, I need to pull my long call out. Long calls come out, that pulls the market back a little bit. So that's kind of what we're seeing right now in the commodity space. Oil's still obviously a pressure, but some of them just got a little too far and the positioning a little too stretched. It means it's much harder for them to make gains. It needs more money to do it, and we're just not seeing that at this point.
Yeah, a lot of dynamics playing out. a lot of competing dynamics, like macro dynamics, market dynamics, trying to compete with each other right now. There's a lot of weird.
There's a
shit
lot of
happening.
contraindicating forces in the markets right now. There's a lot, and so when you have these contraindicating forces, my playbook that I've been telling my Benzinga Option School members and my Second Skies members is hold downside protection through the 18th. As to other things right now, well, try and do a little bit more day trading on these, because with negative gamma increases volatility up and down, both sides. And so you might see a rip and be like, oh, this is the bottom, this is it. And then also the market rips down just as easily as it did before. SPYs showed us that last week. SPYs was looking good one day, ripping this day. It was totally ripping this day. And then it was almost looking like it was going to break out. But then it completely failed. And the sell-off was pretty much as the buy up. The market has that capacity in negative gamma to sell off as much as it does buy up, maybe even more, because of the traders, the option dealers. When they hedge their positions, they are pulling liquidity out of the market. That exacerbates the downside. So traders had a chance to really build some goodwill in the markets, and we're just not able to do that right now. And so anytime you have contraindicating forces, it's like you have people tugging at the same rope from different directions, and that pulls the rope all the way around in the different directions. So instead of trying to swing through a lot of this, my suggestion is day trade, make your money on the rip higher or lower, get out, don't hold it overnight, the risk is too much, while holding downside protection in SPYs through the 18th. And then after that, we'll have some clarity to see, hey, what's going on with rates? How we digest that? What's the market's reaction to that? What are they interpreting this as? Then we can reassess. But for right now, holding things overnight, definitely not the playbook on most things. Some commodities maybe, but you're going to see some massive sell-offs in commodities. And, XME is a great example of that. Like, it's down almost $3 on the day. It is down from its highs over $3. It's lost a full day's worth of gains in the first 3 hours of trading. So not worth it to let things get overextended. That's the playbook right now.
Take your money and run is, I think, a good philosophy, a good way to just approach this. Because we've been just choppy. You can look overall market. We've been choppy for it's been 5 months now of chop, right? There's really no trend. So,
well, there has been a trend on the weekly. The weekly's been pretty bearish. SPYs has sold off.
All right. I'll give you that. Yeah, I'll give you that. Yeah, I'll give you that.
5, 6, 7, 8, 9. Assume this week closes bearish. We've sold off 4 out of the last, 6 weeks.
Yeah.
So there definitely is a trend in the markets, but it's not the choppiness you're seeing is that there's greater weakness in the individual tickers than there is in the SPY as a whole. Apple's still maintaining some of its gains. Some of the biggest holdings in the S&P 500 are still maintaining some of their gains. But a huge majority of the stocks in the S&P 500 and in NASDAQ, they're selling off really aggressive. Some of them are down 50, 60, 70, 90% from their 52-week highs. So that's going to drag on the market.
All right, a question in the chat here. Can we talk DWAC options maybe? I don't know. Can we?
Sure. Why not? Let's do it. We've got a few minutes. Let's do it.
Yeah. And also, I'd be curious to see. I thought someone said this morning that Bed Bath Beyond blew through all its strikes. Is that still the case? Or
we can take a look at BBBY.
Not now. Because it's
during my live session this morning with the Benzinga Option School members and with my Second Skies members, I said BBBY is a short. Literally as soon as the market was open, I'm like, yeah, this is a short. It's overshot. There's no option interest at this point. And it's just overextended at this point. Implied volatility was super high right out of the gate, which means that the options are more expensive. So it requires more capital to do that. So DWAC prior to today had 147,000 calls, 173,000 puts, slightly biased. And of all those options, you're talking 320,000 options, about 20% of them are rolling off for the March 18th expiry. So we're going to see a little bit of adjusting of the options board. But DWAC to me, from an options position, let me look at today's options real quick on DWAC and see what's floating at. But when I look at the positioning of DWAC, I think 100 is just too much. And I think that's why we stalled here. The option flows are suggesting there isn't enough fuel for it to get beyond 100. And so I think that's why we stalled. We really stalled there. Like, why did we stall there? The share volume was good, but it just couldn't get through it. So I think traders that are long calls from here are unwinding those positions. And so, yeah, today options volume is strong on DWAC. 82,000 options on a 320,000 option stock. That's, 25% roughly of the total options volume. It's almost dead even though. 42,000 calls, 40,000 puts. So yeah, my guess is if there's strong option flows on the days and yet we're selling off, I think what we're seeing is a combination of traders buying puts. Maybe traders are long shares down here or somewhere up here. They're buying puts as protection. I think traders are also selling calls, which is a negative delta trade. So both of those don't help the upside at all. So yeah, DWAC is a little vulnerable right now. Where do I see potential support coming in? Hedging impacts aren't really favorable until you start getting to like 79.80, which is right around here.
Well,
So
let's
DWAC,
look at Bed Bath. I'm
before
sorry.
Yeah, go ahead.
Yeah, no, I was gonna say let's look at Bed Bath quickly here.
Sure.
Just want to see where that's at. I haven't looked at Bed Bath in like a half hour or more than a half hour, so I don't even know where
At
it is.
this point, it's probably going to unwind almost all of that, All right, so prior to today, BBBY had 187,000 calls and 130,000 puts. So roughly 310,000 options on the day. Or 310,000 options prior to today. It's traded 626,000 options.
Oh,
it has a sizzle index of 66. I've never seen a reading that high. In other words, the total option volume on the day, 231,000 calls, 395,000 puts, is over double. It's like double the prior open interest. That's insane. And so absolutely insane. In the very first like 2 minutes, like 6 out of every 7 options was a call. But then shortly after it started to sell off, you saw traders buying puts on that and getting long puts on that because now put volume is almost double call volume. So at this point, I would probably say it's a pretty good guess that it's going back to 18, maybe 17. Yeah.
Wow.
Prior to today, only 10% of the options were expiring March 18th. And so, yeah, we told our members right from the open, this thing's going to unwind. And that's pretty much what's been happening.
That's what's happened. Guys, if you want more Chris Capri, you should definitely check out the Benzinga Options Trading School. I put the link up in the chat and on the screen, but I'll put it in the chat again one more time for you all to see it. It's literally just click on this link that I'm putting in there right now, and you get a lot more Chris. Basically, you get Chris every day, live and recorded. There's the link on the screen. There it is. All right, in the chat.
And not just live and recorded. We go over all our students' trade ideas. So imagine having a trade idea and then being like, "Hey, Chris, can you do some analysis on this?" and thinking about it and like going through the open interest and the flows and the overall market gamma. I do that for all my members' trades. Like we get to go through them every single day. And then I can be like, wow, this is a great trade, but move your strike over here. Wow, maybe you want to extend it to this expiry because of this going on. Or, I don't like that trade at all. Like I've saved my members a lot of money in bad trades that they were going to make and then help them make a lot of money in refining their good trades. So it's just an insane service and the students are getting better and better. And it's been awesome.
There we go. All right, Chris Capri. Talk to you again next Monday. Have a good one.
Good to see you. Be well.
All right. We got a hot, but we haven't done a crypto update today, have we, Aaron? I don't think we have. Let's do one right. All right, we got to go. Whoa, that's a weird view. We got to go because the Moon or Bust is going live right now, but we got to look at the heat map first. It's red, not what you want to see. Bitcoin, ETH, Binance Coin, Ripple, Solana, Doge, Cardano, all in the red for the day. Everything except for Atom. My friend Atom Finance? No, that's something different. Everything except for Atom in the red. That's not what you want to see. So this heat map, this segment brought to you by Voyager. If you want some free Bitcoin, just open a Voyager account. Use the offer code ZING when you sign up. Fund your account with $100. Make a trade. They'll send you $50 in free Bitcoin. All right, that is a wrap on today's show. Moon or Bust going live right now. Before we wrap, Please remember that all the information from our show is meant to be used as informational
As investment
purposes.
advice.
No, not
investment advice.
Not investment advice. If we could get a few more likes, that would make my day a little better. I mean, I've been streaming all day. Come on, guys, drop me a like.
Yeah,
we've
Spencer's been marathon.
under 100 likes. Oh, let's get to at least get to
My
100.
last thing that I noticed.
Yeah. Oh wait, sorry. Go ahead, and then I got one more thing.
I was gonna say Netflix is kind of holding up compared to the Q's. Interesting.
Okay, final tally. I just ended the survey. Do you own a printer? 64% yes. 33% no.
You're in the minority, Spencer.
I'm in the minority.
I guess I am too.
People own printers. All right.
Why would I get one for my house when I have like 5 here I could use?
That's the question of life right there. We're done. Moon or Bust is starting.
Love you guys.
I hope they're starting because we're ending.
Redirect is set.
Redirect is set. I'll catch you guys on At to Close in an hour and a half. Be good.